This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about that ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney. Michael's in today again, 2 days in a row. Michael Barr is in. Lisa Mateo here. The newspaper's coming up.
Of course.
It's a 7:40.
There's a couple stories for you, Tom.
There's a couple stories there. The tears came to my eyes when my interns told me about it. We'll do that for you later in the hour. For Global Wall Street, we've got a massive treat coming up. It's going to be a look back here to another time and place. Monica DiCenso with us here from JPMorgan. Lots going on today. A little less politics in the show. A lot more tech in awe. I'm sorry I'm not lathered up about Google. OMG. Somewhere in the cash flow statement, somebody said it ain't working. How much is it down, Rich? How much is Google down? Like
3%.
3%.
Yeah.
It's cratered as
Exactly.
well. Go back and look at go back 4 years and look at when it cratered down 3%.
Yeah, exactly. So I mean, they beat on, they had good revs, good earnings, spending money on this AI thing. So if you're looking for maybe too much spending, a lot of people got a bit concerned about that. But you got to love where they're putting money. Yeah, I mean, I trust Alphabet / Google. If they want to invest in something,
are you selling your NVIDIA this morning?
No, gosh, no, because I believe in this AI thing. I don't know what it is, but I believe in it.
I don't know what it is, and I'm on triple leverage.
Yep.
All cash. We're on YouTube. Subscribe to Bloomberg Podcasts. You go out, you search YouTube Bloomberg Podcasts. You get to us, Lisa Mateo's Gorgiosity there, and you subscribe to Bloomberg Podcast. Good morning. I'll get out of the live chat in a moment. Apple CarPlay, Android Auto as well. From the Interactive Broker Studios, our Bloomberg Business Flash, Lisa Mateo.
You got it. Yeah, futures falling as the start of the Magnificent Seven's earnings season. Kind of underwhelmed. Tesla's profit missed again. It delayed robo-taxi unveiling to October. Tesla shares down 8%. Alphabet also slipping down 3%. NASDAQ futures, let's get to it, down 1%, 222 points. We have Dow futures down 0.5%, 199 points. S&P futures down 0.7%, or 43 points. Earnings expectations, though, from the Mag 7 still high. Bloomberg Intelligence says analysts predict profits at these companies to have jumped 30% in the second quarter. That's compared with a 10% increase for the S&P 500 as a whole. Let's get to the bond market. We have the 2-year yield, 4.43%. That's down 6 basis points. The 10-year yield, 4.24%, and that's down 1 basis point. To earnings we go. Have to point out AT&T up nearly 3%, added more mobile phone subscribers than Wall Street expected in the second quarter. Fewer customers canceling, and Medi adding wireless services to their broadband plans. After the bell, we're going to hear from the likes of Ford, Whirlpool, Chipotle, IBM. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much, Lisa. I greatly appreciate it. This is a treat for Global Wall Street. Monica DiCenso with us, who's got some fancy title about global investment opportunities at JPMorgan. At this time of year, there are thousands of parents going, go get a job. And Paul Sweeney knows that not long ago and far away, but when she was 15, Monica was coming out of Georgetown, and her parents were up in Boston going, go get a job. And the intimidation of going into Alan Schwartz.
Wow.
And the giant Ray Katz at Bear Stearns and saying, "Can I carry the coffee cups?" Why don't you two talk about what it was like? Paul, you were in the knee deep of the securities analysis of entertainment, and Monica was carrying coffee cups. Talk about it.
Monica DiCenso joins us. She's now head of global investment opportunities at JPMorgan. But Monica, you and we crossed paths years and years ago when you were at Bear Stearns. Ray Katz, Victor Miller, Alan Schwartz, all the great media folks at Bear Stearns covering the radio, TV broadcasters, the tower companies. Tom, at one point,
the tower companies.
Those were great sectors.
Things that don't exist anymore.
Things that don't
my job was to read those prospectuses, and I'd read them from the back to the front. My question to both of you then is radio, just in Good Morning on Bloomberg Radio then, it's 14 times EBITDA, it's cheap.
Yep.
Are we in for that right now, Monica? Are we? Where's the blow up right now that's 14 times EBITDA?
Yeah, I don't know that I see anything that clearly that looks that misvalued. What we do see, though, is you look at the broad S&P 20 times, and again, I think back to where we were back in those days, and it does feel fairly to fully valued. And so the struggle now is you see the market down a couple percent, maybe do you jump in and buy? I think you probably see more volatility heading into the fall and into elections. And so I would use any pullback of 3-4% or more to start legging in. As you mentioned earlier, I work with families all over the world, and most of them, unfortunately, don't have enough risk on in their portfolios. They're still sitting in too much cash. And so I'd love to say I'm waiting for 10% down, but I don't know that we're going to get that. So 3 or 4 might be enough to nibble.
So, I mean, you work with ultra high net worth individuals, family offices, those types of folks.
Yeah.
Are they participating in this Magnificent Seven thing over the last 12, 18 months, or maybe are not?
They're participating, but most don't have as much as they would like. Okay. Because what happened in 2022, as you well know, when tech sold off and everything got a little scary, many of them moved to cash. They have that luxury. They're not, it's their personal money. They don't need to be in markets. And then they were hoping for a pullback in 23. Most never actually got back in as much as they wanted. And so now still a bit offsides. Too much cash, not enough risk for generational wealth that they have that they really should be focused on compounding.
So that generational wealth, again, these ultra high net worth individuals that JPMorgan deals with so well, are they still in a 60-40 kind of environment? Are they 60-40, but I need to have some alternatives? Or are they maybe even more cash than a 60-40 portfolio would suggest?
Yeah, a couple of big trends. Right now, again, still too much cash, but that's a function of that fear coming out of 22 and that year when nothing worked.
Nothing worked.
Bonds down, equities down, that rattles people. Broadly, larger families we work with tend to have much bigger allocations to alternatives, to your point, because again, this is not money that they're going to need for the next 5 or 10 years. And so if you can take that illiquidity, that generally is going to pay, and we hope that you're going to earn more than you'll get in public markets. So larger families we work with might have upwards of 40-45% alternatives. Doesn't make sense for a normal retail investor, but when you get to that size, hundreds of millions of dollars that you're investing, you can do that, which pays off in the long term when you're compounding.
Ace Greenberg would say, don't over diversify. To me, one of the diseases right now is massive over diversification through passive and ETFs. Do fancy people with fancy accounts, do they have the courage to be less diversified and bet on a sector or bet on a company?
They do. Many, have made their wealth in one sector or one part of the market, right? It could be autos, could be tech. And so as a result, often they'll have a concentrated position in one sector. That then argues that you need diversification elsewhere.
Away from it.
Yeah. And so we spend a lot of time helping them think about where is your risk. Again, you're a tech founder. You're locked up in a stock. We've got to have you in bonds. We've got to have you outside of the U.S. We have to have you thinking about, again, alternatives, infrastructure. I don't know who's going to win the election, but I'm pretty sure we need to spend more on infrastructure. And so there are bets like that make a lot of sense.
Get another question here, because I want to go to an entertainment. I just want to go, I want to go back to Ray Katz. Go.
How about bonds? I mean, fixed income. I mean, you put a client in a 2-year treasury and get 4.5% here. How are you guys positioning fixed income to your clients?
Again, it's getting people comfortable with that playbook after being out of it for a decade. So a couple things. You're a U.S. taxpayer, munis. Don't have to overcomplicate things. Right. Munis make a ton of sense, especially in a world where people are worried about what is the tax regime going forward and what are my tax rates going to be. Also, adding a little bit of duration, taking a little bit of risk. Bank preferreds, I still think make a ton of sense.
Listen to you.
Yeah, you like that? Citi yesterday came out, issued $1,000 par, 7% coupon. Yep. If you're a U.S. taxpayer, that's almost a 9% tax equivalent yield.
Can mortals buy those, or are they crowded out by institutions?
They tend to be more held by institutions, but absolutely retail investors
can go in and buy. How do you affect a muni transaction for a family office portfolio? Individual?
Some want individuals. I mean, most actually, again, they like to see the line item. I think psychologically for families that makes more sense versus a fund where you just don't know what's going on under the hood. And so we'll do a lot of separately managed accounts, SMAs, and then depending on what tenor duration they're comfortable with, we build it to cater to that.
I do a laddered munis.
Yeah.
That's what I do.
Very good.
So all my maturity.
CFA level 4.
Sure.
To both of you, I talk to Paul about this all the time. Monica, let me start with you.
Yeah.
In the turmoil of what you used to follow, is Disney like the mother of all values, or is it a busted blue chip?
Yeah, I'm having a flashback to last time I was on with you. You tried to get me to talk about a single name, and JPMorgan doesn't love that, but I don't cover Disney as closely anymore, so it would be reckless for me to opine in detail.
Hollywood. Are you long or short Hollywood?
At the end of the day, people still consume media and content. And so how they consume it has changed from when, Paul and I were doing this many years ago, but people still watch stuff. You're on an airplane, everyone's on their iPad, everyone's on their phone. It's just pivoting to how they want to consume it and the bite size and the length and duration, all that. But great content is great content. And so I, personally still own some of those names that I used to work with many years ago. And I think they make sense in a portfolio.
She's in trouble now.
Yeah.
General counsel's over on Park Avenue. Going, what did she just say?
Are they in a new office yet? I mean, because that's still being
it's still being built.
All right.
I did a tour last week. It was amazing.
Oh, did you? Yeah.
What was the takeaway from the tour?
Takeaway from the tour is that building is really tall, and if you're afraid of heights, I don't recommend going up there when there's no windows in there because it's a bit breezy.
We're going to do a remote there.
All I want to know is, like at 425 Park, is there going to be a fancy bar at the bottom?
There's the fancy bar at the top, I've been told. That's, okay. So.
All right.
I mean, not yet, but that's
the surveillance
dream.
remote.
Top of the diamond.
Surveillance remote. Yeah, exactly. Top of the diamond.
Monica DiCenso, wonderful. Don't be a stranger. This was great, particularly talking about the shop that Kay Booth and Alan Schwartz built years ago. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. President Joe Biden will speak to the nation later tonight on his reason why he dropped out of the 2024 race. Biden will speak at 8 p.m. Wall Street time, and Bloomberg will carry it live. It comes as Vice President Kamala Harris was in Milwaukee in her first rally since locking up the presidential nomination.
Do we want to live in a country of freedom, compassion, and rule of law, or a country of chaos, fear, and hate? And here's the beauty of this moment. We each have the power to answer that question.
Meanwhile, Donald Trump will hold his first public campaign rally since President Biden dropped out of the race. Trump stops today in North Carolina. The former president has ramped up his criticism of Vice President Harris, whom he characterized as, quote, the same as Biden, but much more radical. Benjamin Netanyahu delivers a highly anticipated speech in Washington today. After speaking to a joint meeting of Congress, the Israeli Prime Minister will meet with President Biden at the White House tomorrow and travel to Mar-a-Lago Friday to meet with former President Trump. Vice President Harris is also expected to sit with Netanyahu as well at some point. Tourists in Yellowstone National Park ran for cover after a massive geyser eruption that spewed rocks and debris on visitors. This man and his family felt and saw it all.
Very appreciative, very lucky to have gone through this and made it back alive.
Fortunately, no one was injured. The French Alps were conditionally picked as the host of the 2030 Winter Games by the International Olympic Committee on the eve of the Paris Games, and meanwhile, Salt Lake City confirmed as host for the 2034 Winter Games by the International Olympic Committee. Global news 24 hours a day, whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Never too early, Paul, to do a San Francisco 49ers angle. I mean, for Mrs. Barr.
Yeah, she's listening.
You got Andrew Beaton over at the Wall Street Journal. A guy named Colin Kaepernick. Have you heard of him?
I think so.
I think he used to beat the Lions. He's built out a company here, and what a shock. Kaepernick is launching a new AI company. It aims to use technology to help people clear their barriers, including beat the Detroit Lions.
Oh, dear.
Just out now. He's going to do it. I guess it's going to be like with founders of Reddit and that. It's just coming out. I mean, it's just breaking here. But it's another football guy. It's like what A-Rod did with Jason Kelly.
Sure, absolutely. So
they're doing,
see these guys. They're out there in the media.
Baseball
They
stuff.
know what's going on.
There's your 49ers discussion for today. It's Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures are falling after Tesla, LVMH, Deutsche Bank earnings all disappoint, fueling concern about the health of global businesses. Right now, NASDAQ futures down 1%, Dow futures down 0.4%, S&P futures down 0.7%. So Tesla shares down 8%, posted lackluster results for a fourth quarter in a row. It also pushed back the unveiling of its robo-taxis, the production of cheaper cars. Deutsche Bank reported first quarterly loss in 4 years, scrapped plans for a buyback. Shares of LVMH, well, they're falling to a 6-month low after results pointed to a slowdown in luxury items. Kering reports post-market in France. That focus is going to be on Gucci. And Remy Cointreau, well, that fell after it reported larger than expected drop in revenues. So much for my Cosmos. Bond market right now, 2-year yield 4.42%, down 6 basis points. The yield on the 10-year 4.24%, and that's down 1 basis point. Quick check of commodities. Spot gold higher, 2,413 an ounce. Brent crude $81 a barrel. WTI crude $77 a barrel. That is your Bloomberg Business Flash. Tom and Paul.
What are you guys talking about? I missed that.
Remy Cointreau, the liquor manufacturer in Paris, they had
a drop in revenue.
And that's not
my
because,
Cosmo.
Yeah.
Lisa Mateo, she's in the Jersey Shore bars getting the Cosmo. That's what the ladies
Cosmo
do.
has Remy in it?
Yes.
I did not know that. The things you can learn on Bloomberg Surveillance.
Exactly.
LVMH talks about that. They have a whole liquor wing. It's a small percentage of what they do, and it ain't happening. And it was first the U.S. I think we bought it all and put in our closets in 2021. But now it's Asia. I read the report from Louis Vuitton, and it's Asia. And
it is a lack of Asia. Yeah, exactly.
Again,
good point.
They're struggling. Right, we haven't done foreign exchange in ages, and we really need to do it with renminbi weakening out, rounded out to 7.28 yuan, and of course dollar dynamics. And Jane Foley, always good to give us a brief. She's with Rabobank, a wonderful, wonderful bank, really involved in commodities and commercial banking worldwide. Jane Foley, are Rabobank clients away from speculation, away from betting? Are they concerned about yuan weakness that could become yuan devaluation?
Well, they are concerned about why the renminbi is weaker, how far it's going to go, what it says about Chinese growth, but also what it says about regional growth, and particularly now, of course, Rabo's clients are, as you mentioned, they're really concentrated in the food and agri space. So what does that mean? A weaker economy, a prolonged weakness in the Chinese commodity economy, what does that mean for the commodities base? And we do see that coming through into particular countries like Australia, also in the commodities aspect into Brazil. So it does have, quite a large bearing on commodities demand, but more than that also, what the market's been saying about China, the skepticism, the tensions between China and the US, China and Europe, China and many other parts of the world. What does that mean, for instance, for Japan? Are we going to see more investment in Japan? Is that going to be part of the reforms that we're seeing in Japan by the Japanese government to try and capture more reform? So there's lots of different implications of this.
If we get a Trump presidency, if we get a Harris presidency, they're both going to say the same thing. What America needs is a weak dollar. Can politicians jawbone a currency weaker?
They can, but it's not necessarily advisable. I mean, for instance, we've seen a fair amount of jawboning by the Japanese officials. The Ministry of Finance is, of course, in charge of the Japanese yen, just like the US Treasury is in charge of the US dollar. So in a way, you can say it's their job. But, we can look at this in extremes. Look at Erdogan and Turkey. Look what happened when he overtook or put his people into the central bank in Turkey and made it and took away its independence. Look what happened to the credibility of that institution. Look what happened to inflation. It's not a desirable thing to see politicians getting too much involved in in foreign exchange. Now, of course, the US is not Turkey. Of course, it's not, and the Fed's credibility could not be undone in the way that it was in Turkey in quite such a way. But it is going to be difficult, for a Trump to weaken the dollar when at the same time he's talking about massive tariffs potentially, which of course is inflationary. When he may favor tax cuts, which would be inflationary, and that would imply that actually the Fed's easing cycle will be quite shallow.
Jane, what are we to make of the Japanese yen here? We've had a nice rally. I mean, we're sitting here at 154.45 off of a 161 and change print recently. What's going on over our friends in Japan?
I think it's speculators around the world, running for the doors. It seemed just up until very recently, everybody was viewing the yen as the funding currency for carry trades. Everybody was short yen, and then we had the intervention just a few weeks ago, and now there's speculation of will the Bank of Japan hike interest rates on the 31st of July, or if they don't do that, will they start with their bond buying? Will they change their bond buying program to some extent? So there's speculation that the Bank of Japan could become a lot more hawkish, but the Japanese economy is still quite weak. So right now we've got everyone running for the doors, taking off their yen shorts all at the same time. But if the Bank of Japan don't hike interest rates next week, which is quite possible, what's going to happen then? Are we going to have a lot more volatility, I think, over the summer for the yen? And I think that's really quite possible.
Pound sterling. What's your thought here on the pound sterling? I mean, Tom's thinking about coming over to London, and spending a few days there. Is he going to get a bang for his U.S. dollar?
Well, maybe less, looking forward. The elections brought this wave of optimism, and it could just be a honeymoon period, but it has brought a wave of optimism, particularly that stable politics in the UK, which, let's face it, we may have had some stable politics last year with the Sunak and his Chancellor Hunt, but up to that, we had, of course, in 2022, we had the Liz Truss. Right. Before that, we had the chaos of Johnson. We've had Brexit. So we've had many, many years of chaotic politics, and suddenly we have this stable politics. And the common thread now is that that can bring back some investment growth, which has been missing from the UK for a long time. Sterling, whilst it's the best performing G10 currency this year, it was the second best last year.
Yeah. Right.
It's not strong. It's still right. Relatively weak compared with averages. So that could be attractive. And so there is an optimism right now that the outlook for investment and therefore productivity and growth is improving, and that in itself appears to be bringing in more investment flow. So right now, there's a real positivity around sterling, but of course we'll have to see whether or not that's Jane, just a honeymoon period.
I got to get this in. Bill Dudley just published for Bloomberg, and it's a shot heard around the world, folks. This is Dudley of higher rates. The Fed's got to be responsible. And he says, the facts have changed. I've changed my mind. He's looking, demanding, requesting a rate cut July 31, which is 2 cups of Sanka away. Jane Foley, if we get a rate cut July 31, are we prepared for that?
No. The market's looking at September. The market's comfortable with September. I think if we had July, that would be a real surprise. And we would see the dollar course react to that as well as other asset markets. But the question is, are we in a period when the Federal Reserve wants to shock the market? And I would say, probably not. I mean, there are some central banks that want to shock the market. The Swiss central bank, for instance, this year twice has managed to shock the market to its advantage. It's managed to weaken its currency, which is, like a real present really for the S&P, a real gift from the market to allow it to be surprised by the S&P. But does the Fed want to surprise the market? I would say not. So I think maybe the most we would get is a much more positive signal that September is on
Jane,
the way.
It's so much more delicate. She doesn't say no like an ugly American. Lisa Mateo, Tom Keene saying no.
Right.
Jane Foley says not.
No, of course.
Not sounds better than no.
Yeah, that's why we...
Jane Foley, thank you. Treasure of the time. Jane Foley with Rabobank. There's strong comments on Bill Dudley's essay. I changed my mind. The Fed needs to cut rates now. William Dudley, a former president of the New York Fed, legendary at Goldman Sachs with Ed McKelvey. And Dudley, I read the whole essay, Paul, and he just doesn't mince any words. You were successful. You did it.
Yep.
You were transitory. Finally, guess what? cut rates. Bombshell essay by Bill Dudley. I'll put that out on LinkedIn and Twitter here. It's like, I haven't even gotten in the live chat on YouTube. I failed this morning. Yeah. I'll get on that in 8 seconds. From New York City, Paul Sweeney and Tom Keene, this is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. NASDAQ futures taking a hit, down 1%, 198 points. S&P futures down 0.6%, 35 points. Dow futures down 0.3%, 138 points. We have the 2-year yield at 4.42%. That's down 6 basis points. The yield on the 10-year, 4.23%. That's down 1 basis point. On the economic calendar for today, the government reports on June sales, newly built homes. That's after the open. Meanwhile, the Mortgage Bankers Association says mortgage rates eased last week to their lowest level since early February. The contract rate, 30-year fixed mortgage, dropped to 6.82 last week. And that index of mortgage applications to buy a home, that fell to the lowest level since the end of May. To earnings we go. Shares of Visa lower, down 3%. Revenue came in just shy of estimates, and that's a rare miss for the company. Shares of Nvidia lower, down more than 1%. Elon Musk said Tesla will focus on its Dojo supercomputer project, so that has Nvidia shares lower. And news from CrowdStrike. The company says it was a bug in its safety mechanism that was a cause of last week's global IT meltdown. Shares of CrowdStrike, they are up nearly 0.5%. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thanks so much. Okay, it's a bull market. We're up. The only one who's in the market is Paul Sweeney with his 501k. The rest of us have missed the boat. And what I can't say enough, the Peter Lynch phrase, diversification is your danger. Are you over-diversified? Are you under-diversified? The phrase I use, this is from a guy named Daryl Thorpe, is the how muchedness in your portfolio. You own NVIDIA, but how much should you own? If you're like Sweeney, you loaded the boat, and he's doing this as a charity event. But the how muchedness of you own. There is one book. It's in English. It has a limited amount of math. It's called Beyond Diversification. What every investor needs to know about asset allocation. Sebastian Page is a T. Rowe Price. It is definitive on risk and return forecasting. Sebastian, just today, thanks for being with us again. I'm going to go to risk forecasting because everybody's sweating politics and all that. Correlations and something about a freezer and an oven. You start with Kool-Aid and you end up with Lisa's got 2 freezers in the garage, but a freezer and an oven. Explain right now how our listeners and our viewers are screwing up the relationship of the freezer and the oven.
Tom, correlations are unbelievably unstable, and the average is meaningless. There's some markets where stocks and bonds move together, like 22, and there's some markets where bonds are really good diversifiers. So my point about the freezer and the oven was really simple. It's the story of the statistician who had their head in the freezer and their feet in the oven, and they claimed that on average they felt great. And by the way, I think we could push this analogy to market valuations right now. You have 21 in the price-earnings ratio for the S&P. It's 30 for growth stocks, but 15 for value stocks. It's kind of the same idea. The average doesn't tell you much.
So the average S&P return doesn't tell you much as well because we've got this concentration risk. How do you account for that at a huge shop like T. Rowe Price with gajillions of funds, like untold number of customers? How do you think about concentration risk and positioning your portfolios?
Market concentration has been a challenge for active fund managers for sure, but the fact remains that fundamental research, if you're good at it, is going to help you deal with it. But just generally speaking, those episodes of extreme market concentration, they don't last forever. It feels right now like it's going to last forever. Maybe we're on the cusp of this reversal, but it has happened in the past. I don't like to make the analogy to the tech bubble, but nonetheless, in terms of market concentration, we were there.
Yep.
The return on equity numbers for the tech bubble were very low compared to where they are now. Yep. So it's not the same. But then you had value outperforming growth, for example, when this thing unwound by about 45% within less than a year, right? Even in 22, you had kind of a reversal with value outperforming growth by 20%. So these things happen fast. And to use another analogy, I guess this is the morning for analogies, trees don't grow to the sky. At some point, we will get a reversal. And maybe it's underway.
What is a reversal these days? Tom and I keep waiting for a healthy 10, 12, 15% pullback in the market, which would be, reasonably healthy in a longer-term bull market. We haven't gotten that in a while. I mean, since 22, should we be concerned about that? Should we be looking out for that?
Paul, I got to say, in our asset allocation committee, we have the most intense debates between bulls and bears as we've ever had. And we had a meeting last Friday. And let me try to wrap it up for you in some nice talking points, what the bulls are saying and what the bears are saying. The bears are saying essentially two things. The economy is decelerating and valuations are very high. Two simple facts that the bears will use to call for a correction. The bulls are saying, wait a minute, earnings are going up and rates are coming down.
That's my camp.
So you're here and you're wondering, where are we? And going back to the problem with averages, parts of the market are not expensive by historical standards. 15 on value stocks is close to the long-term average. Now, by the way, I don't want to sound like we don't like those growth companies, and we are in our asset allocation portfolios overweight value, but it's not a large position at the moment. And under the hood, we still like a lot of those companies. This is not the moment where I come in and I kind of bash the whole growth company cohort, because they're doing well. They're doing really well fundamentally in terms of earnings growth.
Asset allocation. Tom and I grew up with a 60-40 portfolio. Maybe you want to sprinkle in some alternatives now. If you're an endowment, it could be 20 to 30%. I don't know. But that didn't work in 22. Did that shake your confidence in basic asset allocation?
You know, I get so happy when Tom talks about my book. And the reason why I wrote the book is really the way Tom introduced it, which is, how do you actually define diversification? Like, what does it mean? Mm-hmm. How do you implement it? Diversification seems to be a term that everybody understands and everybody agrees on, but that's absolutely not the case. So, look, has it shaken my confidence? We have research going back to the 70s when similar things happened. I'd published articles 5-10 years before that episode explaining that stocks and bonds can crash together if you get an inflation shock. Mm-hmm. So it did it. It reinforced the idea that you got to be smart about diversification.
I need two things in here before you go. Rebalancing. I'm really skeptical. Tell me about rebalancing at T. Rowe Price. I know Danoff up at Fidelity, his number one holdings, Facebook. He's never sold it. It's like 13% of contra. What do you guys do on rebalancing?
You know, it's this mundane problem that is not sort of part of the discussion on asset allocation most of the time. But if you don't rebalance, at some point, you will end up with concentrated portfolios. Advisors do a lot of work to understand their clients' risk tolerance. And it's not all about 60-40, right? If you're far away from retirement, like Tom and I, we are very far away from retirement, you should have more than 60% in stocks. But my point is, your risk tolerance is where you want to be, and if you don't ever rebalance, you're going to end up with a higher risk portfolio.
We're going to do an hour with you. Just quickly here on rebalancing. To me, it's a theta question of how often do you rebalance, and I think people rebalance too often because it's a marketing concept. Right. Where are you rebalancing? Every year, every 3 years? Where are you rebalancing?
So, look, our tactical process looks at rebalancing once a month, but we don't rebalance every month. It depends on markets. I think you have to make it market dependent as opposed to a simple calendar rule.
And I quote from LinkedIn, when I was a teenager, my father's idea of quality father-son time was to force me to join manual labor projects on the farm near Sherbrooke, Quebec. It would drive me crazy. I wasn't intrinsically motivated to work for hours with those damn black flies on the farm. It took me years to understand that my father was teaching me by example. What a response to your comments on slave labor north of the St. Lawrence Seaway.
Tom, I got to say, the way you read the quote, it sounds very personal to you.
It sounds very personal. The difference is we had deer flies the size of B-52 bombers in Camp Drum while you were fighting off black flies. What was the worst manual labor you did with your father?
I would have to follow him around, clean the barn, which was a lot of work and it didn't smell good, and put up fences. And this was my weekends as a teenager. I just hated it.
Worse, chain link or barbed wire?
Barb.
Right. It was great.
Right. With some electric current going through it.
Oh, electric current. And your sister.
This is
right. Don't put your nose on it.
Station, this won't hurt. Sebastian Page, thank you so much. And
thank you.
I'll put it out again, folks, on LinkedIn. The Page essay on his father is absolutely spectacular with a huge, huge response to our beleaguered childhoods where there were scars. We were scarred for life. Speaking of scarred for life, with our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. Eyes will be on President Biden tonight. He is set to address the nation from the Oval Office to discuss his decision to give up his campaign. Adam Hodge is a Democratic strategist with Bully Pulpit International. He says he expects the president to tout his record over the last 3.5 years.
For one of the final times with one of the bigger audiences, to lay out what he's accomplished in his truly remarkable first 4 years and why he felt it's important to pass the torch to the vice president.
Adam Hodge with Bully Pulpit International was a guest on Bloomberg's Balance of Power. Former President Trump, meanwhile, is demanding equal time. The New York Times reports he has sent a letter to ABC, CBS, and NBC, arguing Biden's speech will be a primetime campaign commercial for Kamala Harris. Trump will hold a rally in Charlotte, North Carolina this evening, 2 hours before the president's address, which is set for 8 p.m. Wall Street time, and we'll bring it to you live on Bloomberg. Vice President Harris was in Wisconsin in her first rally since locking up the presidential nomination. She said that November is a choice between freedom and chaos.
This campaign is not just about us versus Donald Trump. This campaign is about who we fight for.
Secret Service Director Kim Cheadle may have resigned, but there are calls for an investigation. She was under intense pressure from Republicans and Democrats angered by the agency's failure to prevent the assassination attempt against Donald Trump. While on the Senate floor, Minority Leader Mitch McConnell demanded further oversight.
Democrats who so often express concern about threats to democracy have yet to look seriously at the failures of the Secret Service.
Meanwhile, a police body cam of the aftermath of the shooting was released yesterday. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. What a joy last night. I got 20 minutes in of watching. Paul, every year there's got to be a phenom in baseball.
Yep.
Paul Skeen's of the Pittsburgh Pirates.
Holy cow.
And Michael Barr to see, and it's the best stadium in baseball, let's be honest, except for, except for the Sistine Chapel. But, Michael, every seat was taken. Pittsburgh's fired up over this guy. What does he do different, Michael Barr?
Oh.
First of all, he wins. He's 6-1.
Yeah.
1.93 ERA. He's got. I mean, he strikes out people left.
I mean, every single kid in America is going to try to copy his very different.
Yeah, but how can you copy that? I have never seen a pitch like that. And you said it the best. There's movement right from the get-go.
Right from the get-go. I used to sit behind home plate. There was a guy named Calvin Schiraldi who was conveniently wild. It was like watching Bull Durham in real time.
Right.
And the ball started moving 15 feet in front of the plate. Michael, it moves right away.
Yeah.
Comes out of his hand. Boom.
He's only 22 years old, too. Wow.
His idea slows 98 miles.
You asked me yesterday, how do you describe the pitch, the word for it? And I'm still trying to find the word for it.
I'm in exactly the same place. Folks, I can't say, even if you don't like baseball, watch the gentleman from Pittsburgh, Skeens, Skenes, who was the star of the All-Star game. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures are falling with NASDAQ futures leading the losses down more than 1%, 219 points. Dow futures down 0.3%, 154 points. S&P futures down 0.7%, 39 points. We have the 2-year yield at 4.42%, down 7 basis points. The yield on the 10-year 4.23%, down 2 basis points. To currencies, the Japanese yen strengthened past 155 per dollar for the first time since early June. Right now, it is now at 154.16 against the dollar. We head over to some banking news. We already told you Deutsche Bank posted quarterly loss, said it probably won't buy back shares this year. Its shares down 4% in Germany. But now we go to Santander. Their shares up 2%, posted a record profit, upgraded its outlook. And UniCredit up more than 0.5%, raised its full-year net revenue target. And finally, BNP Paribas. Equity traders made more money than their fixed income colleagues. Its shares down about 0.2% in France. That is your Bloomberg Business Flash. Tom and Paul.
It's interesting. Each French bank has a specialty, Soc Gen derivatives, and BNP Paribas sort of has always been bonds, and they're very proud of their math and all that. Equity, that's great to see. Giovanna Bertucci in Dubai.
Oh,
she says, I moved there, and I know it's hot, in Dubai. It's usually like 104 and all that. And she said, it's like a heat wave there. They're having, Michael Barr said record heat.
Okay.
And every day it's like 104, 106 or whatever. It won't go away.
But that's not typical for...
No, that's typical. It's the length of it, the duration.
Okay, I see. Okay.
Humidity this morning was 85%.
Oh, that's not good.
Desert.
Yeah, none of that dry heat.
I was in Abu Dhabi once giving a speech with Jason Trenard, and I went out on the balcony of this fancy hotel. It was like, I opened the door and the music from Lawrence of Arabia cued. And I go out, it's the Persian Gulf at 4 a.m, and I couldn't stand there.
Yeah.
It was so difficult.
Yep, there you go. I mean...
And it's, our thoughts of Jumanji. We'll get around to talk about the heat wave. I can't believe I'm saying that, a heat wave in Dubai.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
Your daily look at the front pages, the Lisa Mateo Hour, brought to you by Interactive Brokers, their bond marketplace. Access their vast selection of over 1 million global fixed income securities, no markups, no built-in spreads, low transparent commissions. Learn more at ibkr.com/bond. She's on fire today. Lisa, what do you have?
All right, a question for you first. Have you ever sent your kids off on a flight by themselves?
Yes.
You
just did it.
You just did it. Okay, how old, were you nervous? How old were they?
Whole time.
Yes.
Flight tracker, monitor it the whole way.
Oh, gosh.
Yeah, total agony, and she was not young. I can't imagine people flying 10-year-olds around.
Yeah. Have you, and you've
yes,
been young
but probably
at that
like
age?
14, 15, probably.
Well, I did. I sent my son when he was about 9 or 10 to see my mom in Florida.
Ah.
So, you walk the kid up, they let you do that. The other parent is on the other side. But can you imagine these kids, unaccompanied minors, stuck with the Delta mess?
That's right.
So this is the big story right now. A lot of parents sounding off on social media about it. This is from the Washington Post. One Georgia man said his kids were stuck at 3 different airports. Parents spent hours on hold with Delta. They said the airline didn't ask about their kids' individual situations. They didn't offer to book flights on other airlines. So the parents had to do it. They were searching. Some airlines, switching to other ones, cost about $4,000. They took long road trips to go get them. Yep. There was one parent who said on Friday, her kid was in North Carolina, not coming back till today.
Wow.
So it's a little bit crazy. Delta didn't say how many unaccompanied children were affected by it, but they did say that they apologized for any confusion, frustration, but I can imagine the frustration.
I still don't fully understand why the problems are specific to Delta.
Because they had the most problems with the outage, the IT outage.
Yeah, and I don't know why that is.
So
was it Atlanta specific?
Mike McKee said it was pilot driven, moving pilots from point A to point B, and all the serious rules about pilot exhaustion that are there.
And now
it's like there. What else do you have?
So Tom, you would probably know more about this than me, but more families turning to Europe for their kids' college decisions.
Huge deal.
I don't get this. Is it cost driven?
It's a little bit cost, but it's more going on than that. The Times of London had an article yesterday cover article, front lead. They didn't do the royal family. They did European colleges and UK colleges are broke because they're giving away tuition to UK kids, so they need the American kids desperately to come over and pay tuition, even if it's less than Duke or NYU or whatever. And it's a real trend in the schools I'm dealing with. They say it's definitely a rising trend, even out of the pandemic.
Yeah, most definitely. And they had Business Insider. They spoke with this family who said basically they have a son going to college in France, a daughter going to college in Spain, and they said the reason is that their son did well in high school, did well in his SATs. He applied to 30 colleges, got waitlisted and rejected from all of them. So he just wound up going to a junior college, but they told him about this program called Beyond the States. And so it helped them to find a college. He found a business school in France, a 3-year program, $13,000 a year.
Nice. Well, that's way lower than the norm, but it's a heated thing. I mean, I got lots of opinions on this nobody needs to hear, but I will say it's a trend. And part of it's a rebellion against 70 and 90,000 a year.
It's ridiculous.
Which is what you see.
It most definitely.
And there's pluses and minuses. Let's be clear. But I'm not here for my opinion on this. Everybody, it's a huge topic right now. Next.
We've been talking about the Olympics, right? In Paris, kicks off today. They have soccer. No. But there is another athletic event underway that you might not have heard of. Runners setting off in Death Valley. It is the world's toughest foot race, okay? 97 runners. They went in the middle of a rainstorm late Monday night. It's called the Badwater 135 Ultra Marathon. Men and women, a lot of different countries, ages from 19 to 69 doing this, 48-hour, it's ridiculous. Daytime temperatures, 120 degrees.
Well, right now in Death Valley, where I believe
what is it now?
It's 96 and the sun hasn't come up. Tomorrow, Thursday, is the high, 122.
Yeah.
It's crazy.
Have you been to Death Valley?
No, I've never been.
It's awesome.
Never
We
been.
took the kids there, and it is amazing to see that top. The whole environment is just extraordinary. But again, you do all your activities very early in the morning, and then kind of midday. If you're not sitting in a pool of water, you can't be outdoors.
But is there like hotels and all that? There's like places to stay.
Yeah. But it's not open in the summer. They close down for the summer. So we went probably like spring break, like March or April.
So a hitter like you rented the Hummer, and you played Dwight Yoakam driving out there?
Absolutely.
Yeah, I can see it.
Yep.
Next.
And I'm sure a lot of those runners had to increase their protein intake, but it's not just athletes. A lot of people.
It's our weekly lecture.
Yes, exactly.
Studies say, this was in the Wall Street Journal, people want more protein, less sugar in their desserts. So
I don't know one person who wants less sugar in their desserts.
Okay.
So I'm calling out the Wall Street Journal here.
Full disclosure.
Such as?
I am guilty of this. It's all over social media. People using cottage cheese in their cookies to make ice cream. I've done it. Believe me, I'll bring it in for you guys one day. Okay, you're gonna have to test it out. Greek yogurt in cheesecake. That's one of the things.
Okay.
But here's the business side to it. So the Wall Street Journal says food brands are starting to kick in. Fairlife, it's this product sold by Coca-Cola, right? It has more protein, less sugar than regular milk. 30% jump in sales this year from a year ago because more people are using it to make dessert.
Seriously.
Whole milk.
Seriously. It's all in my refrigerator, and I just look at the stuff and I go, are you kidding me?
Oh, it is. Okay, see?
Is almond milk and soy milk, is that legitimate, or is that just a spoonful of sugar? It's like Mary Poppins.
I'm not on the almond milk. Soy I can't do. My daughter's allergic. But they're saying the ones with almond milk does have more protein, or almond milk has some protein in it too, which is good.
Ariel says the New York Yankees use the sugar-free
exactly.
But if you're lactose intolerant, that's the way to go. See, but it's the whole idea of protein making you feel fuller for longer, increasing your muscle. So that's the whole thing. But a lot of companies are starting to do this. Dietitians, they're saying, the gig is still up. Maybe you get a lot of it in your meals.
So does Mr. Mateo, is he subject to all your crazy dietary
to my protein cottage cheese ice cream? Yes.
It's like torture, absolute torture. Lisa Mateo, thank you so much for the newspapers. Can I guarantee you Eddie Money never had soy milk?
I can see that.
One of the greatest songs of all time. It saved his career. Edward Money.
Take me home.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Apple's still minting more money than God, right?
Geopolitics front and center for global Wall Street.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Lisa Mateo, Michael Barr. Thank you for being with us on economics, finance, investment, international relations. A little less politics today, but tonight the president speaks any number of topics, but all eyes will be on President Biden this evening.
8 p.m. Wall Street time here. So it's politics is front and center for investors here, Tom. Being an election year, and between now and the November, there's going to be lots of fits and starts for this market as it relates to kind of trying to discount what different parties will mean for the global economics.
Joe Matthew, Kaylee Lyons will have our coverage, Balance of Power. Look for that this evening. We'll touch on it here through Bloomberg Surveillance this morning. David Gura, he's not with us today.
No?
I think
Okay.
he's maybe picking up an offspring up in Maine or something.
Very good.
Like that. We'll get to Maine here in a moment. Futures negative 41, a little bit of Google tension, a little bit of Tesla tension. The VIX 15.27. What was your take on Tesla? You follow it better than me.
Yeah, I thought, it's time to bend metal, and so when you're starting to make these cars, it's about deliveries and production and things. I don't think so. I think he wants investors to be focused on the technology and the technology to come, whether it's AI or robo-taxi or other things. Don't worry about me actually making cars and doing it profitably.
I missed a print yesterday, 76 handle on West Texas Intermediate. Right now, 77.93. Julian Lee scheduled at some point to be with us this morning with real great global perspective on hydrocarbons as well. We're on YouTube. Please subscribe to Bloomberg Podcasts out on YouTube. Android Auto, Apple CarPlay as well. From the Interactive Broker Studios, with our Bloomberg Business Flash, Lisa Mateo.
And futures falling as the start of Magnificent Seven's earnings season. Kind of underwhelmed. Yet Tesla's profit missed again, delayed its robo-taxi unveiling to October. Tesla shares down about 8%. Alphabet also slipping, down 3%. NASDAQ futures down more than 1%, 226 points. S&P futures down 0.7%, 41 points. Dow futures down 0.3%, 158 points. But earnings expectation for the Mag 7 still high. Bloomberg Intelligence saying analysts predict profits at these companies to have jumped 30% in the second quarter. Over to the bond market, we have the 2-year yield 4.42%, down 7 basis points. The yield on the 10-year 4.23%, that's down 2 basis points. To earnings we go. We'll start with AT&T up nearly 3%. It added more mobile phone subscribers than expected in the second quarter. Fewer customers canceling, many adding wireless service to their broadband plans. After the bell, we'll hear from the likes of Ford, Whirlpool, Chipotle, and IBM. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much. Greatly appreciate it. With us now from BNP Paribas, Mark Howard, with us, a really important update here on what we're going to see in the equity markets. Mark, I look at this, but I think Paul and I want to digress here in that you're the smartest guy on the planet. You're enjoying the summer up in Maine, which is very cool. And there's this whole international thing. I look at Seville, Spain, and basically everybody's moving to Oslo. Is there a feeling up in Maine that the new Savannah, Georgia is Boothbay Harbor, Maine?
Well, good morning, Tom and Paul. Thanks for having me. I wish I spent more time there, but you're right. There's been a big influx, not just with COVID, but post-COVID, and up and down the coast and even inland in the state. So it is a state that's changing, not as much perhaps as Florida, but certainly changing.
I mean, Paul, it's stressful here. Topside in with that beautiful deck overlooking Boothbay Harbor. Topside in. 73 degrees tomorrow. The high.
Perfect.
It's terrible on Friday. They get up to 82 degrees.
Nice. Oh, perfect.
That's what you need. Serious thing.
That's where serious.
Everybody's moving north like Mark Howard.
I know serious people go to Maine in the summer. I get it. Mark, what are we doing here in this market here? I mean, we're getting into the thick of earnings here. We've had a good equity market performance here. Plus, I can sit in fixed income and get paid now. How are you guys thinking about how to allocate capital here, equities, fixed income, maybe even alternatives?
Well, Paul, like you said earlier, it's about fits and starts right now, tactically, more shorter term. Mm-hmm. There's, what worked in the first half of the year, pushed the S&P up 16.5%. is not likely to work in the second half of the year. So we've seen rotation recently out of the Fab 7 into the Russell. Within credit, we've seen a little bit of a stall. In currencies, we've seen a shift. The yen has moved up. Carry trades have started to go away. My point is what the lazy longs that worked in the first part of the year and the concentrated bets in the Fab 7 are not the trade in the second half of the year. And I think you have to be more discerning. You see some of these great luxury brands that are kind of hitting a bump in the road and other bellwethers that not just small caps, but larger caps are it's a mixed picture. So
is that rotation trade, was that real or was that a 1 week kind of trade that we saw going to some of the small caps?
We'll see where the policy pronouncements and the odds in Washington play out. But I think it was a sign of a pivot in market sentiment around valuations and around allocations. Doesn't mean we're going to do a wholesale change, but I think, as I said before, some lazy trades where you kind of just ride them are no longer
right where I wanted to go. Lazy trades. We're all fat and happy. If we're in the market, we're geniuses. If we're not in the market, we wish we were in the market. Let's get down to basics. Generating free cash flow and use of that free cash flow, use of cash. Is there a new formula or is it business as usual?
I don't think there's a new formula. I just think, Tom, there's a greater proclivity to invest in future cash flow. So what you and I learned many moons ago about focusing on cash flow has changed with many of these growth sectors. We were talking Tesla a moment ago. You could talk about alternatives and venture capital. Those things were all about future growth, right? Future cash flow and having a meaningful allocation to these either growth equities or private equities or more recently private credit, where the actual cash flow is many years in the future, and that is proved to be a very challenging trade for some, especially if you're late to the trade. If you miss the best managers that manage those alternative investments.
Paul, buried in this statement from Google, free cash flow, 90-day period, ending June 30, $13.4 billion they generated in 90 days that essentially they didn't know what to do with.
Exactly. That's exactly right.
I get the multiples and all that. I'm sorry, these things are profit machines.
They are.
How I'd put it.
They are. So where do you see opportunities here? I mean, is it in equities? Is it in fixed income? Is it in commodities? Where do you see the best opportunities now for perhaps new money?
Right. So I think new money we think should be nimble, not just blindly put into to what has worked this year, but actually be positioned to take advantage of a pullback in the equity market sometime over the next couple of months. I think August is going to be chock-a-block full of things with the Democratic convention, with Jackson Hole, with the run-up to a potential Fed cut. So August actually could be an interesting period to take advantage of dislocations. We're also seeing more idiosyncratic things, Paul. So whether it's a big packaging company that fell the most ever yesterday, or others that have hit air pockets, I think being nimble in this market is where you make good money. We've seen that in credit, we've seen that in currencies, even commodities. You mentioned oil before. So I think being nimble and active is the place to be. Being passive and lazy is not the way. And that applies almost to all asset classes, because my important message is that most asset classes are trading pretty full. And so just blindly buying and riding it right now is a recipe for underperformance.
But within that, and Sam Rowe publishing moments ago, I mean, this is unusual. What time? It's 8:09 Wall Street time. Rowe doesn't get out of bed till 11. He's up watching, the late night shows. Sam Rowe publishes, and he says, I love this phrase, strong economic backdrop, and he talks about solid earnings. So don't you just say, look, I'm going to make 8% in equities. I don't want to be a pig. I mean, to me, that's the heart of the matter. Everybody's looking for the next NVIDIA. And the answer is just make a solid return.
I think you're right, Tom. I think go with established companies with a minor allocation to some flyers, some growth names, some kind of non-standard, whether they're alternative or whether they're crapshoots. And then go with your core blue chip established investments, both in credit and in equities.
This was great.
Yeah.
Could you see a remote on the deck of the top side?
Oh boy, absolutely. This time
breakfast in booth bags.
Exactly.
Everything has berries in it.
Okay.
They do. That's what you do up in Maine. You put blueberries in everything.
That'd be great.
Booth bay's booming, right?
Very solid, Tom. Very solid.
I love what I noticed about the coast of Maine. I've only been a couple times. Is every direction you look, there's water.
Oh yeah,
it's unbelievable. That's the beautiful
also
thing.
Black
about
flies, but
yes,
that's
exactly.
That's a different
And fish
story.
and lobsters. Don't forget that.
How's the lobsters this season?
The prices come down a little bit.
That's what
I had a
Cassidy
good
said.
one on Sunday night, and it was $9 a pound cooked.
Nice.
Really?
Yeah.
That's like, what's a lobster roll cost?
Yeah, that's closer to 20.
20.
Yep.
Do you know what they're getting in the Hamptons?
With chips and a pickle.
With chips and a pickle.
Okay,
That brings it up.
There's good. I don't know if Michael Barr can do the news after this. With our news in New York City, Michael Barr.
Thank you. I'm drooling. President Joe Biden will address the nation tonight about why he dropped out of the 2024 race. Biden will speak at 8 p.m. and Bloomberg will carry it live. Vice President Kamala Harris was in Wisconsin yesterday. She held her first rally since locking up the presidential nomination.
Will stop Donald Trump's extreme abortion bans because we trust women to make decisions about their own body and not have their government tell them what to do.
Meanwhile, Donald Trump is holding his first public campaign rally since Biden dropped out. He will be in North Carolina today. We're learning more about what happened in the seconds after shots were fired at a Trump campaign rally nearly 2 weeks ago. Video from body-worn police equipment provides new details for the investigation. The incident forced the head of the Secret Service, Kim Cheadle, to step down. And now there's word that the Secret Service has asked the Trump campaign to consider not holding outdoor rallies. Anti-scale fences are up at the U.S. Capitol ahead of Israeli Prime Minister Benjamin Netanyahu's address to a joint meeting of Congress. Bloomberg's Amy Morris has a preview.
As Netanyahu arrived in Washington, he indicated that conditions for a ceasefire and hostage deal with Hamas are, quote, becoming ripe, suggesting the two sides are getting closer to agreeing to at least a temporary halt to their war in Gaza. While he is addressing Congress, he'll attempt to shore up U.S. support for Israel. However, many Democratic lawmakers have indicated they will not attend. Protesters are also expected in and around the Capitol. Netanyahu is scheduled to meet with President Biden on Thursday and then will meet with former President Trump in Florida on Friday. In Washington, Amy Morris, Bloomberg Radio.
Salt Lake City will be an Olympics host again after the International Olympic Committee formally awarded the 2034 Winter Games to the U.S. bid. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
I mean, Michael Barr, John Muir Seafood, Detroit, Michigan. You can get a lobster roll in Detroit,
In
Michigan.
Detroit?
Yeah.
Okay.
The lobsters come right up on the shore of the Windsor River.
Yeah, that's it right there. I tell you what, though, there are a lot of great restaurants in Detroit. Lafayette, Coney Island, and there's so many places you can get great food. I'm sorry, okay.
Detroit's coming. It's back. It's coming back.
It's it's big time coming back.
I know.
No, there's no question about that. The Lions actually won a few games last year. Michael Barr, thanks for that. Was great about Maine. This thing of too hot in the south and moving north.
That's a thing.
It's not a small matter.
It's not.
In Europe, it's serious.
Yeah. Yes,
it's
it
like
is.
Athens and Barcelona and the rest of it. Everybody's moving north.
Going to Oslo. Yeah.
Even from Spain, going to the North Shore of Spain up there by Gibraltar and all is a big deal. That was good. Thank you to BNP Paribas for coming in here, Mark for coming in this morning. Red on the screen, futures at negative 45. Good morning.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures falling as after Tesla, LVMH, Deutsche Bank earnings disappoint. That kind of fueled some concern about the health of global business. Here's the breakdown. We have NASDAQ futures down more than 1%, 244 points. S&P futures down 0.7%, 44 points. And we have Dow futures down 0.4%, or 171 points. Let's start with Tesla, down 8%, posted disappointing results for a fourth quarter in a row, pushed back the unveiling of its robotaxis and the production of cheaper cars. Deutsche Bank down 5% in Germany, reported its first quarterly loss in 4 years, scrapped plans for a buyback. And shares of LVMH dropped to a 6-month low. This is after results pointed to a slowdown in luxury items, shares down 4% in France. Meanwhile, LVMH TAG Heuer, well, it's in talks to replace Rolex as the official timekeeping sponsor of Formula One. Big news there. Over to the bond market, the 2-year yield 4.42%, down 7 basis points. The yield on the 10-year 4.23%, and that's down 2 basis points. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thanks so much. So much of the heritage of Bloomberg Surveillance and Bloomberg on the Economy is actually talking to people that have stopped and really thought about the moment we're in. On the high ground of that concept is Gautam Mukunda, who is at Two Rivers Group, which barely describes his contribution to thinking about leadership. At MIT, at Harvard, a Yale lecturer now, but particularly his political science at the Massachusetts Institute of Technology a number of years ago. Gautam, thank you so much for joining us. And I just want to go back to Picking Presidents, a book you put out 2 years ago. Nice timing, Gautam. You nailed that. And in it, you go right to the heart of what I was talking about with David Gura Sunday, I guess. Harry Truman and the system at its best. I was trying in my inept way to explain why 1952 and off the death of FDR in 45 matters. What did they do with Harry Truman that we're stumbling on right now? What do we learn from that era?
Well, thank you for that introduction. One of my friends texted me when Joe Biden said he wasn't running for re-election and said, usually when people say they wrote the book on this, it's a metaphor. And so for Truman in 1948, let's think of this through for a second, right? Franklin Roosevelt runs for president in 1944. He's running for his fourth term in office. Democratic Party insiders know that he is terribly, terribly sick. Everyone who spends time around him can see that this is a man who is not long for this world. But he is Franklin Roosevelt. If he runs, he's going to win re-election. Nobody has any real doubts about that. And that means that they are really electing his vice president. And Henry Wallace, who had considerable virtues, I'm not saying he's an all-pro. Henry Wallace was a man of not just to the left, but the far left. And Democratic Party leaders looked at him and just said, this guy cannot be president of the United States. And in particular, they said he cannot be president in the context where in a post-war world, we're going to be worried about the Soviet Union. And so Democratic Party leaders did what functioning parties do. They lined up, they created a pressure campaign to push Wallace off the ticket, and they picked what they decided was the best person in the Democratic Party to take his place. And in that, they got Harry Truman. And Truman they were enormously rewarded by his sort of really quite surprising in some ways success in the presidency.
Yeah.
But when we think about this is what parties are supposed to do. This is how they function.
Can I say, Paul Sweeney, it's just jump in here, Paul, but it's just simple. J.D. Vance, Harry Truman. Let's go with that.
Hey, Gautam, give us your views on what the Democratic Party just went through over the last several days with President Biden stepping down from the campaign and I guess Vice President Harris kind of taking the mantle here. What's your take?
Yeah, so the first is what I said, is that this is a party functioning the way that they're supposed to, which, give them credit. A week ago, I don't think any of us would have thought that the Democratic Party was dysfunctional, right? That its ability to sort of line up and then move this and make this happen so seamlessly is not something that I think many of us expected. It's certainly not something that I expected. I thought that the transition would happen, but I thought it would be longer, more awkward, and much bloodier than this. Second, when you're looking at Vice President Harris itself, I just want to think this through, right? She could not have found out that she was getting Joe Biden's endorsement, that he was stepping down. At the earliest she could have found out was noon on Sunday, right? Noon on Sunday, because the decision wasn't made finally until that morning. By noon on Monday, less than 24 hours later, she had secured the endorsement of every single plausible contender for the nomination. Whitmer and Pritzker were the last two to fall, and they both endorsed her Monday morning. To do that from a standing start is actually quite remarkable.
Right.
It is not something I think many people would have expected. Right. It's certainly not something I would have expected.
Gautam, how about former President Obama? Are you surprised that we have not necessarily heard from him yet? And when do you expect to hear from him?
No, he put out a statement saying, look, I have always made a policy of not making these endorsements. He didn't do it in 20 with Biden. What I would say is it's clear that party insiders know exactly who he favors. Right? He doesn't have to make a public statement for everyone in the party leadership to know who he thinks should be the next nominee.
Right.
So the lack of a public statement is him being consistent. And I think to some extent him also kind of maybe it's a way of sort of showing respect to Joe Biden, right, whom he didn't endorse last time around.
Okay,
if he didn't endorse Biden, how could he do it this time?
In the time we've got left, I got your next book for you. I know you're doing nothing this summer, but you can go up to Maine and write it off the shores looking out at the Atlantic Ocean. Your next book is called Picking Vice Presidents. You've got to be kidding me. How does Vice President Harris go about, let's just say for the conversation, the derby of an astronaut from Arizona, a guy from North Carolina that's new on the block, plus they need him for a Senate run in North Carolina, and a Jewish governor in Pennsylvania? How do you prosecute that given your expertise?
Well, you got to toss in maybe the leading candidate is Andy Beshear, the governor of Kentucky, right? So my personal bias is Mark Kelly, because then Katie Hobbs can appoint Scott Kelly, Mark's twin brother, to the Senate, and I think that would just be the funniest thing to happen in the history of American politics. And honestly, we could all use a good laugh. But more seriously, the Democratic Party has the problem of its principal virtue, which is it's got a really deep bench right now. Beshear has strong appeal to sort of working class whites. Kelly brings Arizona back into play. Shapiro probably takes Pennsylvania out of play and just makes it a solid blue seat. These are all ones. I suspect it won't be Cooper, who obviously has been fantastic in North Carolina, just because the Democrats are going to double down on we are the young face of change that Kamala Harris gives them, and Cooper is in his late 60s.
I got 1 minute left, Professor. How does President Trump respond to what we've seen the last 3 days and what we will hear from President Biden this evening?
So I got a text from a very, very senior Republican this morning saying, this is a quote, "I stand corrected. I thought she would be a disaster, and this has been the best 3-day rollout she could possibly have had." I think he will find a way to respond. I would never underestimate Donald Trump's cunning, but his standard attacks are really going to run into problems here, because by running against a black woman, the sort of dog whistle politics that he's used to, he's going to be really tempted to go over the line. And we've already seen a bunch of House Republicans start calling her, a DEI candidate, things like that. Just to put this in perspective, 6 years as Attorney General, 4 years as Senator, 4 years as Vice President. She is way more qualified than, J.D. Vance or, George W. Bush not that long ago.
Okay, Professor Mukunda, just quickly here. What should the Red Sox do at the trade deadline? Should they trade or hold on?
You always need starting pitching.
Okay. Well, that's what Paul Sweeney says as well. This has been wonderful. Don't be a stranger. Gautam Mukunda, definitive folks here. I really can't say enough about his book, Picking Presidents. Shockingly prescient.
Wow.
It's like 2 years before he said, let's write a book about 2024. Definitive at MIT, at Harvard, a Yale lecturer as well. Really one of the heavyweights here. That was great. I mean, forget about going back to Truman. President Biden has to look forward tonight.
Yes, he does.
I'm really curious how he frames it.
Yeah, exactly. So he's going to have, prime time from the Oval Office. This is as formal as it gets, and we'll see how he sets up kind of bookending his presidency while setting up Vice President Harris.
The futures in negative 48, Dow futures negative 177. The VIX at, it's 14. We're back out to 15.39, but not the 16 level of a few days ago. From New York City, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. NASDAQ futures taking a hit, down more than 1%, 284 points. S&P futures down 0.8%, 50 points. Dow futures down 0.4%, 173 points. We have the 2-year yield at 4.41%, down 8 basis points. The yield on the 10-year 4.23%, and that's down 2 basis points. Commodities, oil snapped a run on losses. An industry report showed U.S. crude inventories fell for a fourth week. Right now we have Brent crude $81 a barrel, WTI crude $77 a barrel. Spot gold higher at $2,417 an ounce. Currencies, Japanese yen strengthened past 155 per dollar for the first time since early June. Right now it's at 153.98 against the dollar. We have the euro weaker, British pound stronger, Bitcoin up nearly 1%, around 66,000. To earnings we go. Shares of Visa lower, down about 4%. Revenue came in just shy of estimates. Then you have shares of Nvidia lower, down 2%. Elon Musk said Tesla will focus on its Dojo supercomputer project, and that has those Nvidia shares lower. And news from CrowdStrike. The company says a bug in a safety mechanism, well, that was a cause for last week's global IT meltdown. Shares on the rebound up more than 1%. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thanks so much. New home sales on the Paul Sweeney Hour here at 10 a.m. New home sales.
Yep.
Always important here to see. There's a positive lift as a statistic. We'll see. And then tomorrow, GDP, huge. Second look, rather the first look, I should say, at the second quarter GDP. That statistic is 2.0. A lot of gloom a couple days ago, and now it's better. Claims come out. We go right on to Friday with the anticipated PCE price index. We'll talk about that in a moment. Our economic indicators, always brought to you by Commonwealth, supporting more than 2,000 independent financial advisors. With a 2-to-1 advisor to staff ratio, small firm attentiveness, big advisor impact, go to commonwealth.com to learn about their consultative support and technology. Thank you, Commonwealth, for being with us through all of our economic indicators. Your economic indicator today was William Dudley, former New York Fed president. I changed my mind. The Fed needs to cut rates now, like July 31. Falling off his chair at PIMCO, Anthony Crescenzi joins us right now. What would the Jerome Schneider world do at PIMCO if Dudley gets a rate cut in 10 days?
It would be time to accelerate plans to be in the curve steepener, which is to say to favor short-term maturities over longer-term maturities. Right now, it's a bit onerous to do that because, of course, extending out maturities means a lower yield, or some would say negative carry, because some have to finance those longer maturities with short-term interest rates, which the Fed has at 5 3/8 for its policy rate. So buying a 10-year at 4.20 seems like a bad deal. But in a case where the short rates begin to fall, one would want to concentrate there. But the real place to go is the middle part of the curve, 5, 6, 7 year. I'd call the 5-year, 6-year, 7-year like the long bonds of the short end, because it's that point that's the pivot point of the yield curve.
You are more qualified than anyone from sea to shining sea to answer this with your book. 1,200 pages. I'm the only one that read it, Paul. What is the history
my mother too.
of bond people not losing price at a Fed pivot point? Do we get run over, or can we actually game it?
Since 1978, 90% of the time, core fixed income, which is a way of saying longer maturities than shorter maturities, has beat cash, and by an average of about 300 basis points per year. So look out, and this is on a 3-year rolling basis, so look out 3 years from now. Most likely, the Bloomberg aggregate, which has a average maturity of around 6 years, probably will beat cash, and T-bills today are over 5%, by about 3 points per year. Why? Because of price gains. So imagine a 5-year maturity, a 100 basis point yield drop, if it's that large. That's a 5-point price change. Add that into the yield of over 4%, and that's how you get a 9% return in a year, or spread it out, you get returns that are pretty good. And so the story is generally good for moving out the curve. And the big thing, Tom and Paul, looking out next year, is if the curve steepens, if short-term maturities start to outperform, is the idea of roll down. bond managers love rolling down the yield curve, which is to say, when a 5-year maturity becomes a 4-year maturity, as it ages, it rolls down the yield curve. If the 4-year maturity has a lower yield, the price will go up then over a year's time because the 5-year yield becomes a 4-year, and the price goes up, and you get extra returns. And so, roll down is the story going to be a big story in 2025. It begins to emerge again as a source of return in fixed income portfolios.
I love some of your notes here because some of the numbers just blow me away. The global bond market's $135 trillion, but for the first time in 20 years, people actually want to talk to you at cocktail parties because you can deliver returns, yield for them, right?
I mean, when A-rated portfolio, and I'll tell you what the importance of that is, can see returns in the 6% zone. Think this, an A-rated maturity, by the way, according to Moody's, has an historical default rate of 0.02% per year, meaning the bond investor has a 99.98% chance of getting his or her money back. And so the returns are awfully good. And so today it's a veritable supermarket of delightful selections. So many things to do in the A-rated area, AAA, AA, triple B, with returns prospects of between 5 and 7%. It's a smorgasbord right now and a wonderful place to be shopping. So by shopping in the global bond supermarket, it means going down aisles, looking at different sectors, then looking along the shelves, because the bond market's quite complex, lots of things to do. So one quick example, in the asset-backed securities market, there's credit card-backed, equipment-backed, automobile loan-backed securities that are AAA rated that have yields of close to 6% and very short maturities. So an investor needn't stretch out far in yield or credit quality to get returns that are equity-like.
And if I just look at the INGO function on the Bloomberg terminal, the Bloomberg Index browser, in your world of fixed income, high yield is, first of all, it's all green for the first time in like forever, for me, in at least my opinion, for a while. High yield is the place that has had the best returns, 4.28% on the Bloomberg High Yield Index.
Solid returns, an indication of the confidence in the overall economy, because in the end, what a bond investor cares about most is getting his or her money back, and that's the sense that will be the case there. But one need tread carefully, and we'd keep a low relative exposure in high yield now, because you simply needn't stretch out far. And the spreads, the yield spreads, 300 basis points can blow out far more in a negative scenario.
With this nominal talk, what will the 10-year real yield do if Bill Dudley gets his way?
Well, look, today it's subjective what the real yield is likely to be. If an investor thinks the inflation rate's headed to 2, then a yield of over 4% keeps it makes it 2%, and that's what the bond market seems to be suggesting based on the TIPS market.
Yeah.
It probably compresses, but the term premium is at risk of moving up over time, the real yield rising if the fiscal story doesn't change in the second half of the decade. So I expect many decision points in the second half of the decade, many what I call read my lips moments. George Bush, 1988, at the convention said, read my lips, no new taxes, the big takeaway.
Right.
He broke the pledge in 1990 because interest on the debt reached a record, and it's about to reach that level again next year.
We got a real affinity here with selected members of the team committed to the Baltimore Orioles. And a viewer emails in and says, can you ask Crescenzi, is he going to get equity within the Staten Island Ferry Hawks? Have you been to a game out there in Staten Island?
I've been to a game. It's where I used to park my car at the Staten Island Ferry when I began at Prudential-Based Securities in 1983. And I worked after that at Lehman Brothers in the World Trade Center on the 104th floor. So great memories of parking there to go to work downtown, one of my favorite places to be. But now here I am at PIMCO Midtown.
I tried to get Bill Gross to buy the San Francisco 49ers, and it didn't work out. But I can just see you, with a partial interest in the Staten Island Ferry Hawks.
Well, I'd like to buy land at the old dump, the largest man-made object in the world, because it's 50 years of New York's garbage that went to Staten Island. It's covered now. It's a big park. So I'd like to have an investment in the park land right now.
How has Staten Island changed after the pandemic?
I'd say, well, it's become, many think that cities have become less dense, but it feels more dense on Staten Island. I think it's considered rural compared to other parts of New York because you can have a backyard and ride your bicycle, and have a pool perhaps. So I'd say it feels crowded there. It's you could say it's some of that move away from urban areas to a rural area like Staten Island.
John Tucker, our congestion reporter, has taken notes here.
Yeah.
Tony Crescenzi, thank you so much. It's
So
really
great to see
interesting
you all.
there. I got out of that, Paul, 6-year duration. Just shut up and buy it.
Shut up. Yep.
You may be wrong for a while, but
confident
you know,
in the
Bill
Fed.
Dudley's essay this morning. We'll talk more about the Bill Dudley essay. Very, very important. Futures negative 53 with our news in New York City. Michael Barr.
Tom, Paul, Lisa, thank you very much. Kamala Harris says the 2024 race is now a contest between a vision for the future versus one focused on the past in her first campaign rally as a presidential candidate. Bloomberg Government's Jonathan Tamari reports it's a message Democrats are eager to send after President Biden's disastrous debate performance last month.
They needed to shift the narrative. This race had become all about President Joe Biden and his age. And that was a losing formula for Democrats. And it was about what Biden had done previously and not what he was going to do in the future. And now they've kind of turned that on its head by Harris coming in. She's 59. She's much younger than Biden, much younger than Trump. And Trump is now the person who's been on a ballot 3 times in a row. And that Democrats are going to argue is looking backwards instead of looking forwards.
Bloomberg Government's John Tamari in Washington. Harris's next campaign stop will be in Indiana today. She'll address the historically black Zeta Phi Beta sorority convention in Indianapolis. The police body cam video of the officers investigating the attempted assassination on former President Trump's life is now public. The video shows officers and Secret Service agents on the roof of the building approaching the body of the shooter, Thomas Matthew Crooks. Crooks' father is now speaking out for the first time since the shooting.
We want to try to take care of ourselves right now, so please give us our space.
Matthew Crooks told reporters that a statement would not come out until his legal counsel said it was time. Many Democrats plan to attend Israeli Prime Minister Benjamin Netanyahu's address to Congress despite their criticism of him. Senate Majority Leader Chuck Schumer has called Netanyahu an obstacle to peace amid the humanitarian crisis in Gaza, but we'll hear him speak today. Other Democrats plan to boycott Netanyahu's appearance. Netanyahu will address Congress in hopes of bolstering U.S. support for continuing Israel's offensives against Hamas and other adversaries. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
I think we got our answer on Barbie and Oppenheimer.
Yeah.
Is Deadpool and Wolverine. Wow. The box office is Lisa Mateo, our expert on Hugh Jackman.
Hugh Jackman and Ryan Reynolds together in
Together?
one
Oh,
movie.
my God.
That's a draw in itself.
What do you think?
I can't wait. I'm a big Deadpool fan. I love it.
So you've got your tickets already?
Not yet,
Okay.
but I will be
okay.
there. I will be there. That I have to see in the theaters.
2016, 132 million. And then it popped out, to another big number. And I'm seeing modeled 360 million plus quickly.
Yeah, absolutely.
Like
right off the
3
bat.
weekends.
So
whatever.
this is a question. I mean, I think the expectation is global box office of $1 billion is going to be one of those names.
Really?
Okay, yeah. So
why do I know nothing about this?
Well,
besides
is
that,
Tom not the demo?
Good morning, Hugh
The
Jackman.
superhero type. Have you watched any of the any Wolverines?
No,
That's why.
Trump's talking about Hannibal Lecter, and I'm like, who? Mr. Jackman, we'd love to have you on to talk about Deadpool and Wolverine. He listens all the time. And I meet Hugh Jackman.
Yes,
at
in
Bloomberg.
studio. Let's bring him in studio.
He wants to meet me, blah, blah, blah. I didn't know who he was.
Oh, no.
Can you believe that? Now, The Rock, I would know, Lisa.
Yes. Well, thank you.
If The Rock showed up, hi, Rock.
I'd pass out on the floor.
Deadpool and Wolverine. I got to see it. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Right now, futures falling. NASDAQ futures down more than 1.5%, 299 points. We have S&P futures down 0.9%, 53 points. Dow futures down 0.4%, 183 points. We have the 2-year yield at 4.40%. That's down 8 basis points. The 10-year yield at 4.24%. That's down 1 basis point. We have some banking news. Deutsche Bank posted a quarterly loss that it probably won't buy back shares this year. Its shares down 5% in Germany. Santander up 2% in Spain, posted a record profit, upgraded its outlook. And then you have UniCredit raised its full-year net revenue target, but shares down 0.5% in Italy. Sticking overseas, we have events in Paris Olympics kicking off today. Travel Insights company Lighthouse says that hotel prices actually going down. Rooms between Friday and August 11th for the latecomers, they're being listed for an average of $340 a night. That's down 41% of that peak rate that was nearly 1 year before the games. That is your Bloomberg Business Flash. Tom and Paul.
Oh, thanks so much, Lisa. Let's get every second we can with his worthiness on tech. Paul, it started off here with Tesla because I don't give a damn about Tesla.
Exactly.
But can I just say that Dan Ives, for those of you on Bloomberg Radio, you're lucky you can't see this.
Yep.
He's the kind of guy who takes a Williams-Sonoma tablecloth and makes it into a shirt.
Makes it into
that's
a
what
shirt.
he looks like.
He's got lemons and beautiful
lemons
shirt.
and it's great.
Lemons. He's looking sharp as always. Lemons on his shirt, pink pants, all that kind of stuff. Crazy sneaks. I'm not sure what's going on there. Dan Ives, Managing Director, Senior Equity Analyst at Wedbush Securities. Dan, thanks so much for being
great to be here.
In studio with us. Talk to us about Tesla last night. The numbers came in on the boring old automobile business weaker than expected, but again, he's trying to get folks to focus on other issues, whether it's AI, robotaxi, whatever. What was your takeaway from the quarter?
I think it's a tale of two cities. If you want to focus on margins, in terms of the price cuts, lower ASPs, margins were disappointing, 200 bips lower. That's why the stock's down. But I believe that's not seeing forest through the trees. Okay. I mean, this is an AI, robotics, and robotaxi day, now October 10th. That's going to be the story going forward. And I think this is a name where, as this all plays out, and the street will start to better understand what's happening at Tesla. We're buyers in the weakness here.
Do they have a CEO? Is this guy around, or is he helping Donald Trump and Mr. Vance?
Look, I think actually he stayed a little.
What did you hear in a conference call? I mean, is he running the company?
I think he is more from a, what I'd say, a pilot on the plane at Tesla today, adult in the room, than he's probably been in the last few years. Because I think, Tom, the biggest thing is Musk recognizes this is a pivotal historical time for the Tesla story in terms of robotaxis, AI, as well as now demand stabilizing in China. But also, we go back 3 months ago, the haters hate this name. They thought it was 140 going to 100. Look where the stock's at today. Yep. That's why I think you always have to just be cognizant of that. As many of, they hated 50 billion, despised at $1 trillion.
Yep, exactly. So, Dan, just looking at the stock just year to date, it's really an amazing story. Started the first 4.5 months, stock down 50%. Since late April, it's rallied 75%. So we're now year to date, we're pretty much kind of even here for the year. What does that kind of move tell you?
I think it shows that Wall Street slowly is now starting to understand this is an AI robotics play and not a traditional car company, because you'll have 6-7 million vehicles on the road. And I think that lays out what will be the next chapter.
On AI CapEx spend, what can you take from Google last night and bring it forward to next Wednesday and Thursday, Microsoft and Apple?
I think it shows AI revolution. Like we've talked about 9 p.m. and a part that goes to 4 a.m. If you look at those CapEx numbers, look at that Google Cloud, I'm more bullish on Alphabet today than it was 24 hours ago.
Why?
Because you look at Google right now, Google Cloud is on a run rate 40-50 billion. CapEx ramping, search and advertising continuing to increase in terms of that rebound that we see. And this is a company that has the mojo back. They are on the offensive, not defensive. And I think some of the parts, AI adds $30 to $40 per share to the Google story. It's bullish as a read-through from Microsoft as well as Amazon.
This came up at dinner last night. Do you partition AI into this group of companies and that group of companies, or do you blend them all into a Dan Ives continuum?
No, I think you parse them out in terms of the basket. The semi-auto, in terms of the AI plays, the software AI plays, where I view those as the second derivative, the cloud stalwarts, Google, Amazon, Microsoft, and then as we talk about a lot, Apple, the AI store. I continue to believe the AI piece of that Apple is still not being.
Which has the most predictable cash flow forward? Which is the conservative bet for conservative listeners and viewers within those buckets of AI?
It's that company in Redmond. Nadella and Microsoft, that is right now the best bet in terms of AI, in terms of where we see on spending, Azure, Copilot. It's kind of their world, everyone else paying rent from an AI perspective. Google narrowing the gap, but it just goes back to we have $1 trillion of spend. So if you want to sell it on these kind of knee-jerk reactions, go ahead, bulls will buy them.
I mean, you look at Microsoft, it's up only 18% year to date. What do you think is not, I mean, that's excellent performance, kind of in line with the market, but is this something that is not being fully recognized by the market in your perspective?
Well, because I think investors that have missed it, they keep waiting for the shoe to drop. AI, it's hype. The valuation doesn't make sense. They're waiting for some negative aha moment. But the reality is that you, as Tom talks about, CapEx, follow the money. Mm-hmm. You have hundreds of billions. Where's that going toward? Microsoft, Google, Amazon, of course, godfather of AI, NVIDIA.
NVIDIA, I mean, again, the stock's up 150% year to date. It seems like that's where investors are kind of piling in on the AI trade. They're not thinking about maybe that second derivative.
It goes back to, no, we are fully there in terms of Godfather AI, Jensen, NVIDIA, and now that train is going to continue to move full steam ahead, but not focus on second, third, fourth derivatives of this AI revolution. And we talk about Apple is going to be a huge front and center as a second, third derivative, because the consumer AI revolution will now go through Cupertino. And I think more and more investors have started to understand that. That's why the stock from WWDC, the 190 to 225.
What do you see in China?
I think China.
Luxury's getting killed in China, according to Louis Vuitton.
I think China continues to be very choppy from a spending environment. But the one thing I've seen in terms of mid-market Tesla, if I look at iPhones in China, that's actually been a turnaround. So
talk to us about that, because that was a real significant fundamental headwind for, I think, a lot of investors.
Well, I think part of it is that there's specific tailwinds that Apple has, because you have about 100 million iPhones that are in window of an upgrade opportunity. Definitely cold tech war, U.S.-China started to bait a bit. But it comes down to like that, the mid-market consumer in China is spending, but where are they spend? You could be like negative for Nike, but Apple, Tesla, others, to bet on the China doomsday, I think that's the wrong move.
Did you get a call from the chief of marketing at Wedbush? You now have people out dressing like Dan Ives.
No, that's a bad
Angela needs to get a life. I mean, it's a great photo of her here, and she's got the green coat thing going with the flowered top.
Okay.
Like Ives. I mean, there's a trend here going.
Well, but look, just like there's a trend for Keene. I mean, you have many kids. They try to dress like
true,
you.
But
so the point is, it's just, I think it's gone from the Keene. They're trying to follow the path. No one could ever match you. And I think it's just one of those things where it's a combo. It's kind of a combo. So I think what people are trying to focus on.
Is the Arnault family talking to you? I mean, can you see like a Balenciaga tie in here? You know, a collab. You know.
And look, I haven't worn a tie since I think probably last time, Mets won, World
Hey, they won 3 in a row against the Yankees. Do the math.
I'm bullish on Mets.
Are you?
Yeah.
You really think so?
I
Should they trade Alonso?
No. Alonso's core part of the match. Look, I believe we will be in the playoffs soon.
Some of the parts, Apple right now.
I mean, I think some of the parts you ultimately get to a stock that's $75 to $100 higher. When I look at Apple, 300 to 350 is where I kind of view that some of the parts as it plays out.
I wasn't awake until Ives walked in. I mean, his shirt alone is waking me up.
Yep. We didn't even get the Penn State
Dan
football.
Ives, thanks so much.
We are.
When Dan Ives rolls, we roll with the cars. That's what you do. Good morning. Stay with us. Bloomberg Surveillance.
some child. You might think I'm foolish, baby, it's untrue. You might think I'm crazy, all I want is
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene and Paul Sweeney, Lisa Mateo, Michael Barr. It's earnings season. You know that Julian Emmanuel, he does this thing, Earning Edge at Evercore ISI.
Yep.
It's great. He comes out with it. Michael Chu does all the work.
Yep.
And then Julian
That's how it
comes out
works.
like a
That's how it
hero and does revenue and earnings. It's the earnings season. So that's when
Exactly.
you get Gina Martin Adams. And we're going to be quick here to get to Gina Martin Adams, an important insight on the revenue and earnings derby that we're in right now. Good morning, Google and Tesla getting us started really with a vengeance. Yesterday, wait to the tape, some of that off Tesla, some of that off maybe AI CapEx and all the other words. Thank you, Dan Ives.
That was fun.
For waking us up. That's
Yep.
good. We'll do that. He'll be out in single best idea. Maybe. We're in the Interactive Broker Studios. Let's get right to it. The Bloomberg Business Flash, Lisa Mateo.
You got it. And futures falling. The beginning of the Magnificent Seven's earnings season, well, it got off to a bit of a rough start. We have Tesla's profit missed again, delayed its robotaxi unveiling to October. Dan Ives, Wedbush Securities, he was just here in the studio. He said it's kind of this tale of two cities. He said Tesla's story going forward is AI. The street, well, it's going to start to understand that. Right now, they're not. Shares down about 8%. Alphabet also slipping down 4%. NASDAQ futures down more than 1%, 288 points. We have S&P futures down nearly 1%, 52 points. Dow futures down 0.5%, 202 points. We have the 2-year yield at 4.39%. That's down 9 basis points. A 10-year yield at 4.22%, and that's down 3 basis points. Have to point out currencies. Japan yen rises 1%. Right now it's at 153.85 against the dollar. To earnings we go. AT&T up more than 2%, added more mobile phone subscribers than expected in the second quarter. Chipmaker Texas Instruments up 2%, gave a forecast that was in line with expectations. That is your Bloomberg Business Flash. Tom and Paul.
IBM today, 10-year track record. You ready?
Yep.
3.8% per year.
Oh, man.
That's just like, granted, it's got a pop recently, but good morning to everybody at IBM as you trot out earnings today. We just assume these companies are going to do 20% a year. I mean, that's the conceit right now.
Texas Instruments, I haven't heard that name in forever. That's a $180 billion market cap stock. Back in our day.
My book of the summer, Chip War. It's front and center in Chip War.
Very good. All right, we are in the heat of earnings. That's a good as time as any to check in with Gina Martin Adams. She's the chief U.S. equity strategist for Bloomberg Intelligence. She joins us live here in our Bloomberg Interactive Broker Studio. Gina, we're starting to really get into the heat of earnings here. What have you seen?
Yeah.
What are you looking for? Has anything surprised you?
Yeah, so what we've seen in aggregate, S&P 500 companies dramatically beating expectations again.
Okay.
I think that's probably underreported considering the fact that Tesla and some of the big cap, the Magnificent Seven stocks are kind of gathering a lot of the attention. We're looking at the index tracking greater than 10% earnings growth. That's the first double-digit earnings growth season that we've experienced since 2022. So pretty great earnings growth. Better than analysts anticipated of 8.3% at the start of the season.
You called that
financials
a long time ago, by the way.
Yeah, we did talk about that. Our model actually says we'll get 12. So thank you for that. Our guidance-based model says we should get about 12% earnings growth. But financials have really been the story. And as much as we do want to care about the Magnificent Seven and what they say, financials earnings growth is running at a pace 4 times analyst expectations.
Wow.
So analysts were thinking we get about 3.5% earnings growth out of financials. We're getting closer to 13. This is incredible growth coming out of the financial sector as that sector sort of moves past all the provisioning for loan losses, as we see a little bit of yield curve movement, as we see some top line growth emerge there. So I think those are the sort of nuggets that we're getting that are kind of underappreciated, maybe under-acknowledged. Certainly the Mag 7 are getting started on their earnings season, and that's where the bulk of the risk lies.
And Tom, just looking at some of the big financials, JPMorgan's, the banks, Morgan Stanley, Cities, they're all up kind of mid-20s% year to date. There's been really good performance.
We just harassed Dan Ives at a high level. And he hates when I do this because he's got like a target on Apple. And I'll go, what's the sum of the parts on Apple? Do you people do this at Bloomberg Intelligence? Do you do some of the parts on Colgate Palmolive? Do you do some of the parts on Anaconda Copper?
I think that's the analysts do. When it comes to the markets and we analyze the markets, we do some of the parts in terms of the income statement as well. So I do think that, to your point, when we look at the S&P 500, there is a sort of underlying potential sort of nagging factor, and that is revenue growth is still fairly stable, and a lot of this growth that we're getting is coming from operating margin. And that makes some people a little bit uncomfortable. For me, operating margin matters very, very much for determining the direction of stock prices. So I'm kind of okay as long as operating margin is growing. I'm going to assume that companies' profitability is improving, and that's a great thing for stock prices. But for a lot of longer-term investors, they would like to see that revenue line accelerate more, and that's not where we're seeing a whole lot of optimism emerge just yet. I think we may have to wait till later this year and into 2025 before we really get some revenue
Google's
momentum.
just terrible. They did 13.58% revenue growth. It was terrible.
Lagging.
Terrible.
Hey, Gina, here at Bloomberg Radio and Television, we spend a lot of time talking about politics and the impact on the markets. How do you think about this being a political year? How do you think about that in terms of the market historically? How's that?
Yeah. So what we try to do with respect to politics is really focus more on policies as opposed to politics, and what are the likelihoods that we see policy change as the result of a change in administration. So our policy team has done a tremendous amount of work on this with respect to the individual industry dynamics and impacts of a potential reversal, for instance, of the Inflation Reduction Act. For the markets at large, I think the biggest factor to follow really is tax. So we've created baskets of securities in the S&P 500 that have the highest effective tax rate versus those with the lowest effective tax rate. So we can see when the market is or is not starting to price a potential shift in administration. This is the one big macro factor that's very different between these two potential administrations is what are we going to do with corporate taxes? So we're watching that. Frankly, we haven't seen a whole lot of movement there, so I don't think the markets are really trading on the election and the potential policy changes yet. This has really been more about the Fed and policy changes.
You instituted a policy that Anurag Rana and Mandeep Singh can't be in the same room at the same time.
Oh, I did that?
Their importance to Bloom. They can't even be in the same food court.
No, we sent
it's that bad. They're that important. When you talk to these clowns who are telling me AI is the be-all and end-all, do you or your team of AI people, do you put them in different buckets of likelihood of success? Is there a conservative AI call?
No, I think this is a really great point. And, I do think that Anurag and Mandeep, respectively, have done a great job of covering their separate industries and the exposure to AI in their industries. When we talk to Anurag, for example, we talk a lot about Microsoft and where is Microsoft headed. You have to get to the semiconductors analysts out there in San Francisco to really talk about where NVIDIA is headed. There are different components of the supply chain and of the tech space.
Our listeners and viewers, they bundle them all together.
Yeah, they do.
Violently disagree with
it. It hasn't really shown up as an earnings driver beyond the very earliest stage, which is semiconductors. We're seeing it emerge as an optimistic data point for some of the rest of the tech space, but we haven't seen that fundamental growth yet emerge. Instead, it really is more about how much are these companies going to spend on development, how much of these companies are going to spend at the earliest stage of AI. So I do think it's important to walk through the stages of AI. Most profoundly, we in our team in strategy are really tracking what is going to happen outside of tech. How much implementation of AI can we really expect? How much spending? We're not seeing much. It's really in financials and real estate so far where we're starting to see at least mentions and chatter and talk about potential spending on this new technology. The rest of the sectors in the S&P are very slow to adopt it so far.
I went to dinner last night with 17-year-olds, which is, it's a 2-martini dinner. Yeah. and the answer is they spent the whole time talking about all their friends that do their homework with ChatGPT. Yeah. And the teachers are rebellion. That's the only application I see.
I'm glad I'm not in that game anymore.
Read the Aeneid. Okay, click, click, click. You got 14 pages on the Aeneid. We didn't have that. We had the Cliff Notes.
Exactly. We had Cliff Notes back in the day, and they worked just fine, thank you. So what sectors screen well for you guys these days, Gina?
Yeah, so very interestingly, our sector rotation model actually pushed into sort of early cycle sectors. So financials was right toward the top of our sector rotation model. Healthcare is toward the top of the model.
Oh, come on.
Energy is even up there now. So we've actually, for the first time in 6 quarters, our sector rotation model in June said, okay, maybe we're going to see a leadership handoff. We're going to see some rotation out of this big tech and communications trade to some of a catch-up in some of the other sectors.
Was that what we saw, I guess, a week or two ago with the Russell 2000 outperforming the S&P by such a wide margin for a handful of days?
Yep, I think that's part of the trade is sort of as the prospects for a Feddies come into fruition, we're looking at greater than 90% chance of Feddies now in September, according to the bond market.
Okay.
That helps small caps. It helps the 490.
Quickly here, we're squeezing bar. really important. UNH, healthcare.
Yes.
Trading range since early 2022, it's just broken out.
Yep.
Are you suggesting healthcare finally breaks out?
It looks, from a fundamental perspective, we're set for an earnings recovery to emerge in healthcare. And that's really what's guiding our scorecard, is that earnings recovery should create that better price momentum landscape for healthcare. It's had very cheap valuations for quite some time.
Taking notes, Lisa?
Yes.
I mean, you know, you and I are in 201ks. The only way we're going to retire is Gina Martin Adams. Gina, thank you so much.
Sure thing. Thank you.
Appreciate it. Bloomberg Intelligence. Right to it with our news in New York City. Michael Barr.
Thank you very much, Tom, Paul, Lisa. Kamala Harris says the 2024 race is now a contest between a vision for the future versus one focused on the past in her first campaign rally as a presidential candidate. Bloomberg government's Jonathan Tamari reports it's a message Democrats are eager to send after President Biden's disastrous debate performance last month.
There's just a burst of enthusiasm from Democrats who are really down in the dumps for a long time around Biden. I don't even think a lot of Democrats realized quite how down they were until they had this alternative. I saw one story that said, you know, for example, when Biden was in Wisconsin, many of the statewide officials there stayed away from his rally, and every one of them came to Harris's rally. I think it's just a sign that even if the issues are the same, this change brings a lot more energy on the Democratic side.
Bloomberg government's Jonathan Tamari in Washington. Harris's next campaign stop will be in Indianapolis. Meanwhile, former President Donald Trump's campaign stop will take place today in North Carolina. Tourists in Yellowstone National Park ran for cover after a massive geyser eruption that spewed rocks and debris on visitors. This man and his family felt and saw it all.
Very appreciative, very lucky to have gone through this and made it back alive.
Fortunately, no one was injured, but it destroyed a boardwalk used by tourists. Sunday was the hottest day ever on Earth, and then Monday said, "Hold my beer." The European Climate Service, Copernicus, said that Monday broke the previous day's record. The global average temperature Monday was 17.15 degrees Celsius, or 62.87 degrees Fahrenheit, and that beats Sunday's record by 0.06 degrees Celsius. The French Alps were conditionally picked as the hosts of the 2030 Winter Games by the International Olympic Committee as the Paris Games get underway. Yes, even though the opening ceremony isn't until Friday, men's soccer and rugby play their opening today. Meanwhile, Salt Lake City confirmed as host for the 2034 Winter Games by the IOC. Global news 24 hours a day whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg Town. Paul, Lisa.
Michael Barr, thanks for doing the geyser thing. I saw the video of it. And Paul's really, have you been there, Paul?
Where?
Jellystone Park and the geysers and all that?
Yeah, just
spectacular. No?
Spectacular, yeah. It was great out there. It's just a great part of America. Summertime, boy, it's just fantastic.
Do you know 20 people have been killed in the geothermal pools, geysers, and mud pots?
Really?
Yeah, they go wandering off.
Old Faithful, it is.
I had no idea.
Yeah.
We have to do more on this.
Remote.
Michael Barr, thank you for that. Really appreciate it. Futures deteriorate, negative 51. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Brokers Studio, I'm Lisa Mateo. NASDAQ futures taking a hit, down nearly 1.5%, 282 points. S&P futures down 0.9%, 51 points. Dow futures down 0.5%, 207 points. The two-year yield at 4.39%, that's down 9 basis points. The yield on the 10-year, 4.21%, that's down 3 basis points. Commodities, oil snapped a run of losses. Right now, Brent crude at $81 a barrel, WTI crude $77 a barrel. We have spot gold higher, $2,417 an ounce. To currencies, the Japanese yen rises 1%, the strongest since May. It's now at 153.91 against the dollar. We have the euro stronger, British pound stronger, Bitcoin up about 1% at 66,000. To earnings, shares of Visa lower, down 3%. Revenue came in below estimates. And an update from Delta, their shares down 1%, but its CEO says the carrier now sees minimal cancellations today, expects tomorrow to be back to normal. This is all after that CrowdStrike IT outage on Friday. Checking in with CrowdStrike, they say that bug in a safety mechanism, that was the cause of the issue. Shares, though, for CrowdStrike on the rebound, up nearly 1%. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much, Elisa. Appreciate that. This is a joy. Anytime Julian Lee trots out, it's important. He has bulletproof academics over the years with a foundation out of London, of Warwick and London School of Economics. But far more importantly, has decades of working with Sheikh Ahmed Zaki Yamani, who was a household name not that long ago. Julian Lee, to Sheikh Yamani, just simply, how are the Saudis different now from you when you were working with them years ago?
I think it's a very different place now. And I think there are two big differences that certainly have affected the oil situation. One is Crown Prince Mohammed bin Salman's Vision 2030 of transforming Saudi economy, Saudi society, moving away from a dependence on oil. I mean, you know, reducing oil dependence is something that's been talked about virtually since the 1960s in much of the Middle East. And it's only now that that's really beginning to happen. The second thing I think that is very different is in the appointment of Mohammed bin Salman's half-brother, Prince Abdulaziz bin Salman, as energy minister. He is the first royal to hold that position. And that, you know, that's a position that has been there for 60 or 70 years.
How do they project across the Indian Ocean to get all that product through the Malacca Straits near Singapore, Malaysia, Indonesia, when they got China pushing back the other way? Is China friend or foe to Saudi Arabia?
I think China, to a very large extent, is a friend. I mean, we've got significant inward investment by the Saudi oil company in Chinese refining, trying to secure a long-term market for their oil there. But China, you know, exists in a very competitive environment. It's not going to buy excessive amounts of oil from Saudi Arabia if it can get it more cheaply elsewhere. And one of the issues I think that the Saudis have faced over the last 2 or 3 years is the willingness of China to buy oil that has been sanctioned by the West. So we have huge amounts of oil going from Iran, from Venezuela, and more recently from Russia into the Chinese market. And that has pushed out to some degree several of China's traditional suppliers, including Saudi Arabia, who are finding that competition stiffer as those sanctions are maintained.
Julian, what's driving global oil prices these days? Is it the supply side of the equation or the demand side of the equation, or maybe a little bit of both?
I think it's a little bit of both. I mean, you know, whenever you look at the market, there's always a bit of both going on. I think what we're seeing at the moment is, on the one hand, the expectation of a summer peak in the northern hemisphere. You know, an increase in driving, an increase in air traffic as northern hemisphere summer holidays really kick in. I think there's a slight nagging feeling that that's not growing quite as fast as some people thought it would. And the other big demand side story, I think, is China, where demand really, again, is not picking up as much as people had anticipated. And I think that's putting something of a lid on oil prices, and I think that's a lot of what's been behind the drop in oil prices that we've seen in recent days. But on the supply side, we've also got issues. We've got the wildfires in Alberta that are posing risks for Canadian oil production. We've got the threat of a very active hurricane season in the Gulf of Mexico, which, while it hasn't yet had an impact on US production, there are fears that it might do with forecasts of a very active season. Right. And we've got Russian oil exports that are falling to multi-month lows.
How about the role of the U.S. here as now a net exporter? How does OPEC deal with the U.S.? How does OPEC view the U.S. now that it's less dependent upon that part of the world?
I think the relationship is a complicated one. I mean, if you talk to the Saudi oil minister, he welcomes the growth that's been seen in U.S. oil production. He repeats very often that Saudi Arabia's desire is to balance the oil market, to make sure that there is enough supply to meet consumers' needs, but also to generate at prices to generate a reasonable income for producers. And he said that couldn't have been done without the growth in U.S. production. Of course, if U.S. production hadn't grown, Saudi Arabia would have been producing a lot more than it is now.
The Trump-Harris teams are listening to this, Julie, and they just emailed in both of them separately. And they said, ask Julian Lee about American oil independence. The basic political debate here, Julie, and I'm sure you're following it, is the Biden administration really doesn't want to take credit because they got environmentalists there, but they're making more oil than Alaska ever did. And the Trump administration is saying, no, they completely failed at all. Who's right? What is the oil independence, Julian Lee, of America?
Well, okay, nobody is ever going to be oil independent. The U.S. has gone from being a net importer to a net exporter. In somebody's book, you could argue that that is independence, but it is still absolutely tied into the global oil market. So if prices go up because of something that happens in Russia or in Saudi Arabia or in China, the US is going to feel that. The only way that anybody can truly become energy independent would be to close their borders to energy trade, and that doesn't work in anybody's interest. So in my view, true energy independence is a myth. On the other questions, yes, we have record levels of US oil production at the moment. That is in part due to investment decisions that were probably taken several years ago. But what the Biden administration has done is put increased protections in vulnerable areas like Alaska. And I think that's an important step.
Julian, very quickly here, are gas cars dead?
They're not dead yet. But I think that the global trend is moving away from them. I do think that the gasoline, the internal combustion engine, is probably the power source of the past and not the power source of the future.
Okay, Julian Lee, this is great. Thank you. Really, really appreciate it. Julian took me over to Mayfair to look at the electric Bentley.
Yeah.
He knew, he wanted me to slide into that.
Well, he knows those.
Julian Lee, I was seriously just a lodestone of perspective out of London there on hydrocarbons, to say at least. Paul, I mean, I'd go to cash, except I'm already in cash.
I know.
Negative 54 SPX.
Exactly.
It's grim. Google's going out of business.
Exactly. We got the NASDAQ off 1.5%. So a little bit of pullback there in the tech sector, Tom.
My head's spinning. I mean, Gina Martin Adams, she's a player. She's in the market.
I know.
Did you believe how optimistic she was?
I tell you, she's nailed this earnings call. I mean, she was in here a month or so ago and saying, watch for double-digit earnings growth this quarter. Boy,
we're going to talk in the next half hour. Bill Dudley's essay, Fed cut rates now. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo alongside Tom Keene and Paul Sweeney with your opening bell report. Now, more corporations opening their books this week. A start, Magnificent Seven's earnings season. Well, didn't get off to the best start yesterday. Tesla, Alphabet. We'll check in with their shares in just a bit. After the bell, we'll hear from the likes of IBM, also Ford, Whirlpool, Chipotle. Let's see how the markets are reacting right now. We'll get to the S&P and check in. Oh, hold on, wrong screen. There we go. Up about down 0.9%, 51 points at 5,504. The Dow down 0.4%, 168 points at 40,189. The Nasdaq down nearly 1.5% at 263 points at 17,734. We have the 2-year yield at 4.40%. That's down 8 basis points. We have the 10-year yield at 4.23%, and that's down 2 basis points. Quick check of commodities. We have spot gold higher, 2,417 an ounce. Brent crude, $81 a barrel. WTI crude, $77 a barrel. Now let's check in with Tesla. Down 8%. We have Alphabet down 4%. That is your Bloomberg opening bell report. Tom and Paul.
Thanks so much, Lisa. I appreciate it. We haven't done that much on this today. We should do more, and we can do that with Brian Whalen, really experienced co-CIO, TCW, Trust Company of the West. Is that right?
That's what it, yep.
You should see their Dodger tickets. Unbelievable. Brian Whalen joining us now. Brian, Bill Dudley, New York Fed president, comes out with a blistering essay for Bloomberg Opinion. I changed my mind. The Fed needs to cut rates now. What happens to the TCW Brian Whalen world if they cut rates July 31?
Wow, that's the market is not expecting that. Right
Agreed.
Now, it's almost 100. Yeah, 100% odds they're going to cut in September. That's the expectations. We are in the Dudley camp. You know, that's our belief, but you know, it would take a lot in between now and the meeting to get them to cut. And I don't even just see the economic data that could actually turn it. I mean, maybe if the meeting was a few weeks from now, where it was after the employment report in early August, maybe that would do it. But they're most likely not. But let's go back to what Dudley said. Like, what he's saying is what we've been saying. You know, and we were a little early, but we've been saying it all year, which is, and we're really seeing it in the last few months, really since early May, which is like, we are seeing the bite from higher interest rates start to kind of creep up the economic food chain. You know, a year ago, you know, I was on the show and I would say things like, well, look at like the bottom part of the consumers, like subprime consumers, and their delinquency rates, and they're defaulting at a higher rate on autos and credit cards. Well, now, you know, a year later, which by the way is called a lag, we're seeing that creep up the food chain. So now it's, you know, the middle tier of the consumers that are doing a lot of substituting, and they're not really paying the same thing. We're seeing it hit like mid-sized businesses. They're having a problem, you know, with these levels of interest rates. We're seeing it in housing, not in pricing because we don't have enough of them, but in terms of activity, you know, like borrowers who are paying 3% on their mortgage rate, they don't want to move. They don't want to have to pay 7%. And people who are trying to get into the market, they can't pay 7%. So we're seeing this creep, and it's kind of leading to the point, which is Dudley's point, which is like, if you're speaking to the Fed right now, the active Fed, you're saying, you know, look, like it's the dreaded words we all kind of avoided from our parents or didn't want to hear, which is like, you're pushing it, you know, the Fed, you're pushing it. Like, you know, I know you want inflation at 2%, but you know, where are we right? We're at kind of 2.5% right now. By the end of the year, you know, if you include what's going to happen with housing and the lagged effect on these indicators, we're going to be at 2%. So you're pushing it, because if you keep waiting every month, we're in an economy now that we may not be in a recession, but it's pretty clear we are slowing. You know, it is stalling here. And, you know, by the way, 5.5%, you cut 25 basis points. You know what 5.25 is? Restrictive. You know what 5 is? Restrictive. Like, they've got a long way to cut rates just to get toward neutral. And this economy is not one that's just going to turn on a dime.
And Paul, is it Veronica Clark and brain freeze? I'm so sorry. Went to UCLA. Citibank, they're saying every single meeting.
Well, that's kind of where I wanted to go with Brian, Tom. I mean, so the market, Brian, you're suggesting, or the warp function is telling us, is pricing in a cut in September. Then what? How do you think this Fed is going to prosecute a rate cutting strategy over the coming quarters?
Our call is that generally, like what is in the market right now? It's basically the Fed's going to start in September. and they're going to cut every other meeting at about 25 basis points. I will tell you, people don't want to talk about history books because they want to talk about everything's different this time. But historically, the Fed never cuts at that rate. That's not the way it works, because the Fed waits a little too long and the economy starts slowing, and then they start to cut and they realize the economy, this ship does not move on a dime. If it's in a slow, it's going to take a while. So now the Fed has to play catch up. And so, like, as a bond investor, the active management element here is like, do I believe that it's going to be different this time and the Fed's going to cut very gradually for the next 18 to 24 months and we're going to get to neutral and the economy's not going to hit a recession? Or do I kind of stop looking at some of the metrics on my dashboard, so to speak, and just kind of look around me and be like, you know what, this thing is slowing. And if we're right on that, and it's slowing at a faster rate than even the Fed's willing to admit right now, when they do cut, let's just call it September, the next few meetings and in 2025, they're going to have to cut at a faster clip than the people expect right now. What that'll mean is for bond investors is really nice returns, because bonds can be bonds again. Because right now, the last 12 to 24 months, 3 years, everybody wants to talk about. Nobody wants to talk about what's probably, I think, going to be one of the biggest terms going into the second half of the year, which is the word liquidity. Everybody, it's been in the dustbins. Nobody wants liquidity. Apollo's on a global tour telling everybody to sell liquidity, which to me, when I hear that, you know what I hear? I that's like Eskimos flying around the world telling everybody they need ice. It sounds great. But once you get an event in a slowing economy, all of a sudden liquidity is popular again, and people want liquidity. And you know what high quality bonds give you? They give you liquidity.
Yeah. So where, Brian, do you see opportunities in this market if that Fed is going to do what you think it's going to do?
High quality bonds. If you want to be super conservative, do it in treasuries. If you want a little extra yield and you can sell a little bit of liquidity, do it in like high quality instruments, like the highest part of the corporate bond market, or even agency mortgage securities. They look really cheap. But what you want to avoid is what most of the world looks like right now, which is fully priced, which is like high yield and lower quality securitized assets. Like you're not getting paid or compensated for the world that we just described and what Bill Dudley just wrote about.
Yeah, but if I look at my Bloomberg index browser, in the world of fixed income, high yield's been the best performing sector this year. Are you suggesting that trade's already played?
I'd suggest this. Like, if you're an investor, if you want to invest looking in the rearview mirror, buy high yield. If you want to invest looking forward, buy high quality bonds. Because, by the way, let's not also put high yield in the dustbin. Like, let's buy high quality bonds now looking forward because they're rich. But then there's going to be an opportunity to buy high yield bonds much, much cheaper, and that's the value play.
So, I mean, it sounds like in your mind, has this been a soft landing? Is inflation kind of under control? Has the Fed, in hindsight, done a good job here?
It's been it's so far, but what's the old joke about the guy that falls up the building? Every floor yells "so far, so good," but you know how that ends. So so far, so good, but it's slowing, and we got very restrictive interest rates, and the Fed's going to have to move very aggressively to kind of put the goose back in the economy.
Brian, very quickly here, and I'm going to give you a West Coast question. A gentleman who was a great support to me when I started this act was William Amundsen, who ran a small bank and foundation out in Los Angeles. He was immense support, and we lost him in 2008. And he would always talk to me about the shadows that are out there. And of course, we can look in hindsight at them. Where is Brian Whalen's shadows right now? Where's your unknown that could lead to a shock?
I'm going to go back to what I talked about before, which is liquidity. It's been the movement of credit kind of off balance sheets to the private credit market. And by the way, look, private credit is here to stay. Like that's not going anywhere. But sometimes when markets have felt too good for too long, you've seen some bad behavior build up, and also people kind of, they got recency bias in their memory, and they're used to a world that's very liquid and supportive, and asset prices are high. But I think like the risk out there is that once you get this downdraft in asset prices, and maybe it's a pullback in equities or a widening in credit spreads, like we're not really, I think, in a world where, where interest rates are and the fact that the Fed hasn't cut, like we were used to a world for so long, the majority of investors out there have not been in a macro or a capital market environment where the Fed, when there's vol, doesn't rush to the rescue and flood the market with liquidity. Like, I think there might be a little bit of a different approach now from the Fed. So the Fed and other global central banks, given the fact that we aren't where they want us to be in inflation, they might not run to the rescue of the capital markets when you see vol, and that could create an awesome buying opportunity.
Brian, thank you. Brian Whalen, Trust Company of the West, TCW, thank you. Appreciate that immensely. Tape deterioration, negative 61 points on the SPX. That's worse than futures. Dow, negative 130. NASDAQ down almost 2%. Ugly morning. Now with the news in a 201k in New York City, Michael Barr.
Thank you very much, Tom. Paul, Lisa. Now at the top of the Democratic presidential ticket, Kamala Harris is on the campaign trail. Today, Harris will speak in Indianapolis. Yesterday, Harris made her first campaign rally in Battleground, Wisconsin.
We have doors to knock on. We have phone calls to make. We have voters to register. And we have an election to win.
A panel of Democratic Party leaders will meet today to finalize plans for an early nomination process. We get more from Bloomberg's Ed Baxter.
The preliminary plan would have the delegate vote take place the first week in August and would formalize the result of the 32-hour blitz Kamala Harris put on to gain the delegation's support. The Ohio deadline to get the name on the ballot was moved back, but there are several other states with deadlines during the convention. And with the Heritage Foundation threatening to sue to keep Harris' name from appearing, the party has decided to move so that there is not a replacement process, just a nominating process. Party attorneys saying they will not allow MAGA extremists to disrupt the electoral process. Ed Baxter, Bloomberg Radio.
Later this evening, President Biden will address the nation on why he dropped out. Bloomberg will carry it live starting at 8 p.m. Wall Street time. Former President Trump is asking for equal time. The New York Times reports the Trump campaign is calling Biden's speech a prime-time Kamala Harris endorsement. Trump will speak today in Charlotte, North Carolina. The police body cam video of the officers investigating the attempted assassination on former President Trump's life is now public. Meanwhile, the resignation of U.S. Secret Service Director Kim Cheadle is not enough. Republicans want more accountability. Senate Minority Leader Mitch McConnell.
This murderous assault on our democratic process very nearly robbed millions of Americans of their choice for the next president.
McConnell spoke on the Senate floor. Israeli Prime Minister Benjamin Netanyahu will address a joint session of Congress later today in Washington. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Paul, I want to revisit a wonderful first conversation this morning. And I remember the uproar that you couldn't lose money in local TV and radio.
Yeah.
And we all went to lunches. I threw out a ratio, folks, 14 times EBITDA. The details don't matter other than, Paul, there was a fever, in that. Yeah. You lived it directly. Where's the fever now? Is it AI?
Oh, yeah, absolutely. And that's much bigger and broader than what happened back in the day. But I mean, the Telecom Act of 1996, which essentially deregulated telecommunications, out of that 800 pages, there was about 14 pages that deregulated the radio and TV business. And what you saw in that decade following was just a huge consolidation of the radio and TV business across the country. And a lot of big companies were created, Clear Channel and so on. But that technology is now ancient technology in the world of the internet and the world of all this new technology.
Are we going to sit here? I mean, the four of us will still be together. Remember the time where AI?
Right.
And now it's ancient technology?
We'll see.
Can I perceive AI as ancient?
I think the tech numbers that we're hearing from the Dan Ives of the world in terms of the capital spending associated with the AI, stunning. And it's across the board. I mean, and most industries are going to be impacted.
Our job is to give you the conversation, the debate that's out there. We're not going to say buy, hold, sell. We'll try to give you different sides of this discussion. Dow Jones, a negative 144 from New York City. Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lise Mateo. Stocks really taking a hit after a disappointing start to the mega cap earnings season. Kind of sparked concerns that the AI craze still needs to pay off. We have NASDAQ down more than 1.5%, 323 points. The S&P 500 down more than 1%, 57 points. The Dow down 0.2%, 104 points. We have the 2-year yield at 4.41%, down 8 basis points. The yield on the 10-year 4.23%, and that's down 2 basis points. To earnings, AT&T added more mobile phone subscribers than expected in Q2. Now their shares up more than 3%. And Blackstone Mortgage Trust, their shares down more than 1%. They provide financing for commercial real estate, cutting its dividend by 24%. Defaults increase, borrowers struggle to make payments or refinance their loans. That is your Bloomberg Business Flash. Tom and Paul.
Thank you so much. Nimrod Khan joins us now from Boston with North Star Asset Management. Nimrod, the jumble that we've heard for the last 3 hours is extraordinary. Lots of different opinions out there. What is the belief of your clients at North Star? Are they on the same page as your advisors?
Our clients are concerned about, the general malaise as to what happens with this election, the outcomes, and specifically a lot of our clients care about the climate and the planet, and if we're going to go back on the progress we've made in the last number of years. So those are some of the things that our clients are focused on. A lot of the nonprofits, foundations are focused on what impact they're going to have with their grantee partners. Just overall, are they going to be able to meet the needs of their grantee partners and earn a respectable return on their portfolios?
Okay, where's that respectable return? Are you talking with disinflation tendency that the actuarial assumption will come down?
The longer term trend, the biggest longer term trend is around the aging demographics, right? So from that perspective, yes, as people age, as they retire, they're going to end up saving more, spending less. So yes, there is that whole inflationary focus from there. Offsetting that in a bigger way, we think, is the tendency towards a secularly higher pressure on deficits that results on higher yields, longer term, we subscribe to the higher for longer view. The other part of that is we are moving away from the global disinflationary tailwinds to bringing back manufacturing, bringing back, going back to localization. So those are headwinds to what we would say to disinflation. It's a pull and push, but overall, we kind of tend to believe that the pressure is on the upward.
So given that backdrop, Nimrod, kind of how are you approaching asset allocation here, stocks, bonds, and maybe even alternatives?
We remain very disciplined on the long term. I heard some of your earlier speakers as well. There's always trades in the market, but we are going to remain focused on long-term investment views. And our view is that let's start with figuring out what are the financial needs, and then what we would consider the longer term growth in the portfolio. From that perspective, we still remain committed to balanced portfolios, just because you don't know what are the shocks that's going to come your way. And that's the best way to deliver that return.
Nimrod, thank you so much. Nimrod Khan, North Star Asset Management in Boston. At the White House, Jordan Fabian joining us now with Bloomberg News. There will be a speech tonight. What an odd speech, Jordan. Just an open question. What do you expect from President Biden?
I'm expecting to hear an explanation of why he dropped out of the race, and perhaps some rationale behind his decision to throw support behind Kamala Harris, and just anything looking ahead to the November election.
It's all planned. It's all choreographed. Where will be the surprise?
Well, that's the point, Tom. He sort of took the starch out of the speech by announcing his decision on social media on Sunday. So it'll be interesting to see how many people actually tune in for this, given the news is already out there. So it is in prime time. He has an opportunity here, but now that he's a lame duck, his audience is going to be limited.
As a lame duck here, what are the expectations coming out of the White House about what this administration would like to achieve between now and January?
It seems like their mind now is on foreign policy, trying to wrap up some of those loose ends, like ensuring Ukraine has the support it needs going into a new presidency, and also trying to secure that ceasefire between Israel and Hamas in Gaza. And also, I mean, the president has signaled he plans to get out there and try and campaign for Kamala Harris. How much he wants her to do that remains to be seen, but that's one of his goals as well.
So, I guess one of the things here is for the president tonight is to try to frame his decision in the context of his total arc of his career. What's the feeling in Washington with a couple of days of hindsight here about this decision to step back?
Well, it certainly provided a boost of energy for Democrats. You've seen a lot of fundraising pour in. That money had been on hold amid really the concerns about Biden's age and acuity. We've seen some polls showing the race narrowing. So there is some energy. She is getting a bump. We'll see if that actually lasts. But to your point, Paul, this is a chance for President Biden to kind of cement his legacy, give a legacy-defining speech, explaining his accomplishments and what he did with his one term in office.
Jordan, one other idea. Is it true, or within your reporting, that basically the Biden team went over to the vice president? I'm speaking there uninformed. Is that what happened?
Yeah, she was in contact with Biden himself in the lead up to his decision. So it wasn't as if he popped a surprise and put it on social media before going to her. And look, I mean, it makes sense. He picked her as vice president because he had faith in her. And there's also structural advantages, like she inherits his whole campaign staff. She inherits all the campaign money. A governor or someone else from outside the White House structure doesn't get that advantage. And with only 3 months left to Election Day, those things were really important.
Jordan, thank you. Best of luck, and we'll have that tonight. 8 p.m., Paul?
Yes, 8 p.m. Wall Street time.
Oh, smarter time than 9 p.m. The President of the United States. And look for balance of power. Joe Matthew, Kaylee Lyons, with good perspective today. I want to squeeze this in right now. It's too important. Team coverage. John Tucker on congestion pricing, our surveillance congestion reporter, and Michelle Kasky writing it up at City Lab yesterday. I mean, this is all of a sudden, John, it's tangible. New York City congestion pricing plan.
Well, it was always tangible, and it was always there. But
$16.5 billion shortfall.
Oops. Yeah, they're going to have. This is going to crimp their balanced budget plan through at least 2027. So Governor Hochul has to come up with an idea to make up for the shortfall that the congestion pricing would have patched up, and I think it's going to be a tax on businesses. I still maintain that.
Okay, but just to be as cynical as I can be, and I don't want to put you in an ugly position, but there is the first Tuesday of November, and on the first Wednesday of November, when she gets the election outcome she wants because of this, does she go, oh, never mind, and puts us back into this, whether it's $15 or $12 or whatever?
I think the uproar would be palpable. I doubt it. You know. She said congestion pricing for New York City is technically on hold. I suspect it's not coming back anytime soon.
But John,
that proposal.
Ringing Midtown Manhattan
are
all of these
the
sensors.
Infrastructure is there, and
it
that
looks
was
good.
That was well, that's a matter of opinion, Paul. And that was a $500 million price tag for the contractors to put all that stuff in.
Well, can we use those
Well, you can use it for you can use it for spying on people, for doing all sorts of different things. You want to know what Lisa's doing on her drive home? You can use those cameras.
Anna Chapmany, Citizens Budget Commission, says 5 balanced years look to be difficult, look to be challenging.
Yeah, well, that was true, that's been true for a while, even before congestion pricing got put on the shelf. So.
Okay. Well, thank you for your update, John Tucker, our surveillance congestion
I thought I
reporter
resigned
here.
that position.
Oh, no.
It's a life appointment.
Lifetime appointment. And seriously, City Lab at Bloomberg, quite good. Michelle Kasky, thank you for a serious update there on the governor and the state. Having fun, 80s music, Canadian. Bryan Adams. Paul Sweeney next with some serious economic data. Good morning.